Will now be recorded.
Yeah. So coming to the RAR, I worked on both SD-RAR and BRIM-RAR. That's when recently I'm working on some projects. So that's about me. Have any questions before I start?
Yeah, you said recently which project you worked?
I worked previously in HP as a
Oh,
freelancer. Both BRIM-RAR, SD-RAR, they have both.
oh, in RER.
Yes, RAR and BRIM space.
Okay, good, good. Thank you.
So shall I go ahead?
Yes, please.
Okay,
Yes,
let
yes.
me.
Yeah.
So let me take you through this introduction. So what are the topics mainly covered in the training is it starts with a standard overview. So even before you learn the S4HANA, how SAP has given solution for the IFRS 15, we need to understand what actually IFRS 15 is about. So only then we will be able to understand why SAP has given that kind of architecture. So that's why we'll focus initially understanding what is a this IFRS 15 standard. Okay, so it's standard, it contains definition of IFRS, when we have to recognize, how and when, and how, and it has other stuff like contract asset liability. So all these are driven by the standard. Okay, so we need to understand the standard. That will help even when you go to consulting, right? So you should be able to explain what is standard, and that's because of the standard, RAR architecture is defined based on that standard. We always start with standard and then we will go through the RR architecture. This is purely how SAP has uh, designed the RAR based on the IFRS and the existing one. So before RAR, where was the revenue recognized? That was in the SD, right? So based on that architecture, they have defined this RAR. So we will see briefly about this. And the next is integration with sender components. Uh, in, and this is also very important topic. So once you understand the architecture, I'll take you to the slides when you go through. So integration under components means SD and the BRIM and the CRM and external. These are various sender components. How IR can receive the data from various sender components, that we will see in this topic. And once we receive the data, how do we process this inside RAR? That's called an inbound processing. So, and then once you process that, next there will be something called the BRF plus. So BRF is a very general application. So where and how we use for RAR is something we learn in this very important topic, especially from the technical point. Okay. And then contract management, it includes various changes what we bring as a part of contract, how we create the contract structure, and the allocations. So the base of the IFRS itself is like how do we allocate all the bundles, and then changes. Whenever there is a change after you create a contract, then how SAP can handle the contract changes. Changes can be, it can be modification to the contract, it can be cancellation, or it can be anything else. How changes are handled. And next is fulfillment. Yeah, for the already created contract, how do we get the fulfillment and how do we process this invoices for the previously created contracts? This is about this. This mainly involves getting the uh, data from the source systems like SD and the BRIM, okay, tightly integrated. So, and then revenue accounting postings. Finally, once everything is done, how do we post everything to the FIGL? And once everything is done, finally, we end up showing how do we pull the reports? How do I know that, what is coming in right or not? There are some reconciliation reports and there are some standalone SAP Fury reports that also we can see. So we go to next. So why we need to know a little bit background about this standard. So at most like 8 years this is in place. 2018 is the date in which all the required entities, like mostly public sector companies, big companies, they went live with IFRS 15. So before that one, there is some like the 10, 15 years of history, how it evolved. So the why this, um, there is a background about this. Every industry, who is selling the same product, whether in India or other countries, right? So they were selling it at different prices, different, including every product they told is never a standalone. It's always includes the hardware, software, maintenance, and other services. So what I sell and what other companies sell to the customer, the way they sell the products is very different. Okay, it's not that physically we sell the product and other my competitor also sells physically the same product and they recognize revenue, I recognize revenue, and the stakeholder who invested in both the companies will be able to see the revenue who is performing better. But that's not the case, as you see. Every company is selling basically the products with heavy discounts. Okay, with product and the service bundled together. That's why we never know what is the price of the product, what is the discount they are offering, what's the price of the service. And I will not be able to evaluate company A or B who is better. Okay, that's where the challenges have come into this one, and that's where the IFRS 15 itself has brought into picture only to bring everybody on the same platform. Okay, so that will help the stakeholders to see who is performing better in the market. Okay, so that is a background. So if you can think of that one, the impacted industries are mainly high-tech industries and the telecom industry. These are the few industries that are heavily impacted with this standard. And there are other industries like manufacturing or who are only involved in services, not products. For them, it's okay. SD-based revenue recognition are most the same. So because they are selling products and my competitor also selling products, nothing is hidden. So it's very easy, right? So straightforward. So you'll not be able to see where, how it is different from the SD based RAR or previously old RAR, old revenue recognition with the new IFRS 15. But you see this impact mainly in the high tech industries and the telecom. Okay. So impacted industries have to report this based from the 2018. Okay. So before we get into IFRS 15, how the reporting was happening in multiple gaps, that also we can see. We'll have some understanding about that. And yeah, this is about this one, the background about this. So before IFRS 15, what are the standards? How they are gone? So in USA, there is something called the internationally accepted IASC is International Accounting Standards Board. FA is the Financial Accounting Standard Board. So every country has the accounting standard board. In India, we have ICA, accounting standard defined by ICA, Institute of Chartered Accountants India. So everyone have to report as per that. In US, we have a similar standard. So internationally, we have IASB. So everyone internationally, yes, we have IASB, but it's not that consistent. Okay, like IFRS. So especially if you ask me, US GAAP will report as per their country, and Europe would follow the international accounting standard. India would follow Indian accounting standard. So there are some discrepancies between all the three. So IFRS is a very common standard across the globe. Okay. So coming to this one, do not get into mind that okay, IFRS 15 has come now locally. Every country has their own standards, right? Will that get replaced? No, you still report the country specific way, But for IFRS 15, you have to report it as per the IFRS internationally. When you file your financial statements as per IFRS, you have to report revenue as per IFRS 15. That's the understanding. Now, don't get confused that, okay, IFRS has come and it has replaced the local gap. No, you still, if US companies, they still report the revenue, file the returns as per US gap as well as IFRS, both, same in India. Okay, so that's the background about this. Applicability. So who has to apply this? So all entities that have a contract with customers. So everything starts with contract with customers. So contract means you should don't get into think that okay there will be always a contract in the system, and with the background of contract we create the sales orders or whatever it is. No, contract means as per IFRS it can be even an oral contract that I agreed to sell and you agreed to buy. So agreeing to buy and sell it is enough to apply this contract. That's simple. So there are some contracts that are out of scope. For example, lease. So you'd have seen some companies, they give these cars, laptops, other stuff to employees on lease, and buildings, business purpose. They lease the buildings from vendors, and they also lease out their extra buildings to the customer. They make some revenue. Those revenues under a lease are out of scope for IFRS because they are covered under the respective leasing is IFRS 16. We have separate standard for that. So that is used. So lease is out of the insurance contracts because it's covered by insurance. There is another standard. Okay. And we have other financial instruments like if company got some extra money and they deposited in the financial instruments or banks or other bonds they bought from other companies. They also make some revenue right out of that. So those are again covered under separate IFRS 9 or 10. So that doesn't come under IFRS 15. So reason why? Because there is no contract to buy and sell. I just got some extra money. I'm investing in some financial instrument. It can be anything. So those are governed by IFRS 9. The simple revenue will be recognized, whatever you earn. And okay, so IFRS 10 consolidated, IFRS 11 joint agreements. Yeah, we have separate statements for these financial instruments. It is governed by those.
So just a
So just,
query. So
yeah.
you are going to cover up all these IFRS 11, 9, 27, everything, or
No,
how?
we'll not be able to cover because these are huge standards and the context behind this is huge. So this has no relevance to the IFRS 15. But we can take some examples to see, where, what the contract falls under these financial instruments or IFRS 15. Okay, so this never comes under, will not be able to
So
go through everything.
that means this IFRS 10, 28. These are all different types of the modules. Means in that only it will cover. So
No,
how do we?
these are, there is no separate module in FICO for these. These are generic one. Okay, so we don't have like only for IFRS 15 we got a RAR, but for this there is no. We have a like joint venture accounting, right? There is a module within SAP joint venture accounting, okay, and that can be used. And for group reporting, this IFRS 10 is used. It itself is a separate module,
That's what I'm saying.
right? Group reporting is IFRS 10, and there is a joint venture accounting, another standard. Financial instrument, as such, we don't have, but we have treasury, right? So treasury as a module is used to account this IFRS 9 little bit. Okay, it is covered by other modules. And if wherever there is no specific accounting required, normal in FLCO will handle this financial instrument. But we don't have, we are not going to cover because these are separate modules by some of them. Yeah.
Okay. Okay.
Other cases like non-monetary exchanges between the same line is in the same line of business or facility sales to customer. So non-monetary exchanges, that means you exchange for some, whatever it is. You agree to sell something and not in return for money, but for something else. It's like an old barter system. So this kind of transactions are also out of IFRS. Simple. What covers in IFRS 15 is a normal revenue which companies do the business. Okay, very normal one. So except this one. Okay, so what is normal is something when you work in a project, your product owner will define what should be the in scope for IFRS 15. So we being the SAP consultants and mostly on product side, technical side, will not be able to define what's in scope, but we should be able to explain what should be covered in IFRS 15. But when you work on projects, product owner have to tell, okay, whether it's a monetary or non-monetary, will not be able to make it. Let's move on to the history of the revenue recognition. It started with 2008. All these boards came together, uh, because in late 2000s, okay, after because of the e-commerce, all this came like 20, 25 years back. So lot of goods are bought and sold and as a services and products. If you buy service, some product is free, that heavy discount, but all the products charges are covered under services. This kind of businesses become more popular online selling, or, because of the internet. This became very popular. That's when challenges have come into picture. So 2008 onwards, they started discussing about this one because of the internet evolution and e-commerce and the way we do business have completely changed. Because of that, this standard was being discussed from 2008, and all the way to make companies compliant, it took almost 10 years. Anyway, we are already in the past 2018. It's effective. We can move ahead with it. I believe most of the companies who are in the IFRS, who are in the public trading or who come under the scope of IFRS would have already went live. Whether they are using SAP or not, they are already compliant with IFRS 15. Okay, so you should not assume that okay, if they are not implemented RAR, it means they are not IFRS compliant. No, they can even prepare in spreadsheet. They can prepare it manually. They can prepare it any technology, but they are already compliant. Only thing is that if they want to bring it into SAP RAR, that's where we have this project. We should have some knowledge how to work on that. So how revenue is recognized currently? If uh, clients are already using SAP and they're not implemented RAR and how they are recognizing it. Okay, so sales from the revenue from the sales from the stock. So it means that if they are selling any product, simple, we create a customer quote. The quote is agreed by customer, it release, it becomes an order, and then we uh, deliver the quote to the customer, and then we create the SD billing document, and then it has the revenue, right? We debit the customer and credit the revenue and discounts tax, and then any taxes are there. That's simple. It's a invoice-based revenue recognition is something we are doing today. That means as soon as we invoice, we recognize the revenue. That's called SD-based revenue recognition. And in case we have services, we have a straightforward. We also create the sales order as a service thing. We can always create that and recognition based on the event. That also is there. In SD itself, we can recognize. We don't need any IFRS. So this is time-based revenue recognition. How this is controlled? We can see in SD we have a item category. Item category service for the item category is different. This is different. That's how we can differentiate in SAP. So
That is basically item category means basically that some options are there, correct? Like event based,
yeah,
time, that earlier is ECC it was used. So same thing is right now also it is used in S4HANA also, correct?
yeah. But thing is that that item category, the revenue is it will not calculate any revenue in that. Similar concepts are used, but all this is moved to RAR. Same it is.
Mm.
It's moved to RAR, but little architecture is different.
Mm. Okay.
But the way we create sales order is same. We do the delivery. So nothing you find any difference in SAP SD, but you see the difference in accounting.
Okay.
So all services were to do the time-based revenue recognition. All physically, whatever you sell the products, right? So that goes via goods issue, proof of delivery, some additional event fulfillment. So if you provide the service, there won't be fulfillment. It's okay, you provide service and you recognize it. Okay, so these are the two different. This differentiated by item category. So though we use a SD, I don't know they are using the same account category. So but recognition wise, these are we do in RR.
So it is written only time based. There is no event based or value based like that.
Yeah. So time based is for the services. Like you are selling the say if you are in telecom industry, you sell the phone and service is what the data service we provide to the customer that is
So,
recognized based on the time.
so basically periodic based billing kind of, right?
Yes, it's a periodic based service. Like
What
1 year,
about
2 years contract, and every month you have to recognize that till the end of the contract.
yeah, that is fine. What about the event based? Let's say Christmas is one event or New Year is one event. So that type of revenue.
Yeah, that is for the physically when you issue to the customer. Okay, we create a contract, but we don't recognize it. Why? We wait for these events to come into RAR. That's called as the events. Goods issue is event, proof of delivery. We have some more. Okay, these are the fulfillment events. So once we get this fulfillment, then only we recognize the revenue. This is applied only for the event-based revenue.
No, I don't
Yes.
think this is the good issue is something transactional based transaction because good issue, good POD is all types of these are all transactional based revenue. But I am thinking some event based like some of the
No,
mm,
let me explain you.
that,
Let me
that
explain.
No, no.
So when we have this events means when you have this products you are delivering to the customer, so we will not immediately recognize the revenue in RAR. The reason is we wait for the customer to say, okay, event two. The moment how RAR works is when you come to this one, where as soon as we create, you all will be knowing that when we create sales order, we also create the parallelly a revenue accounting contract and we create it. Okay, but we don't recognize the revenue. We wait for the event to come to RAR. Event means you have to issue the goods to customer. Only then fulfillment happens. Only then I can recognize the revenue. These are the events which is relevant for the RAR. Proof of delivery. There are various events that you can define custom events also in RAR. Yeah. The
that
purpose is
that
to
I
recognize the
understood.
revenue.
That I understood. My question is, let's say in the Xmas, suppose some greetings cards or some lightning, something has been sold at that particular moment, maximum huge quantities particular to that date only. So in that case, how which revenue
No, no,
recognition
no.
is?
I think Rajendra, those events are different. So in SAP or for IFRS, right, to recognize the revenue, for example, if there is a sale, okay, so to recognize whether it's a revenue we need to recognize or not, for that we need to show proof is a delivery. There is a proof of delivery. In case of service, it requires a service acceptance date, like that, not Christmas, not Sankran, not like that.
No, I think that in ECC earlier that is a event based one option was there in the item category. So that's why I'm asking that question.
Yes, yes,
So
the
that is not
same
there right.
concept. That is in ECC, whatever is there, right? The same year.
So
I
you're
think they
talking about
changed the name.
milestone billing, right? So
Milestone is a percentage of completion. There is a different
Hmm. That is the
projects and
difference.
all.
Okay, okay, carry on.
They can carry on.
So, so anyway, when we come to system, we can see that one. So for now, we can take some examples. We can keep that example of, I didn't get that one. What is that greeting card you were saying? Your company is
No,
selling
no.
that.
Suppose suppose in the newer greetings card is there particular to that particular date only the sale has been happened, not other days. Suppose
See,
Christmas only the
uh,
Christmas.
yeah, Rajendra. For
That is the
example,
event date. That's what I'm
yeah.
saying.
So whatever the example you have given, right? For example, greeting card. So whenever they deliver, right? So when they deliver, that time only will recognize. Is the
Okay.
one quantity or huge quantity? So you're the goods delivered, proof of delivery.
Hmm.
So
Okay.
otherwise, what happened, right? There is a chance to manipulate the result.
Correct.
Like, for example, in the last day of the year, they may book some sales. So after that, they may return it. So as per this standard, we can't recognize as a revenue. So we want to show that proof. So this is actual sales. Getting?
Correct. Correct.
So the goods, so whenever the goods delivered, right? So that times we are recognizing. So for that, we need to show as a proof of delivery. In case if it is a service, so then the service acceptance date. That is important. Yeah, you can proceed.
Okay, yeah. So
And actually,
this is a
Rajan, I think that those events, right? Maybe he linked with that. Yeah, you can proceed.
yeah, events are linked to the actually performing that one. Until unless you perform, see, when you go through the definition of IFRS 15, you will understand why we have to recognize, when we have to recognize. So anyway, I'll probably it's there in next slides. I can explain. Okay, so mainly we have this event-based and for time services, we use this time-based services. And another is percentage of completion. There are some other industries percentage of based on the like if they are into any project. So neither event is applicable nor time is applicable. If you're neither selling this nor this, and if the revenue is based on completing the milestones of the project, say like if you have a project agreed with customer and there are three phases: initial prelim phase, next completion, next some 50% completion, next 80% completion, next 90%. As soon as you complete that work, you can recognize that. Okay, this is percentage of completion. Okay, so SAP SD revenue didn't apply to S4HANA. So earlier, everything was recognized in SD based revenue. So the moment you create billing document, you have all revenues. But this is what is moved to RAR. Revenue
No,
accounting, yeah.
no, earlier what happened? Can you explain once again?
So
What you said?
earlier, revenue was recognized based on the SD based billing document. Okay. The moment you create sales order, you issue goods to customer and you create the invoice or okay, so the invoice actually contains the revenue, invoice based revenue. where we have
In
a debit
ECC,
customer.
no,
Yes,
is
yes.
in ECC.
Not only ECC. Uh, yes,
No,
even
no.
today also, if you don't use RAR, you can still go ahead with SD based billing. So if
SD
yes,
SD base we can use it. So when you deliver that or proof of delivery or acceptance date is there, then only it will recognize when you run VF44, not based on the billing document. So billing document is a general is a normal document. So while coming to
yes,
the IFRS, yeah, you need to run your
that is for
VF44. Then only it will.
services. Yes, I've seen that one in my previous
Yeah,
company. Says you have to run that one, but entire architecture is inside the SD based one. It is not. There is nothing like a separate SAP module. Okay, so if you have
I
time
think
based, then we have to run VF44.
I think
All
what I
these is
observed.
there.
So what I observed in ECC6, right? So there is an option in the. So if it is a blank, so it will recognize immediately. There's a revenue recognition, right? A, B, like C,
B
D.
category B is there. Category B, if you can go and check that we use for VF44. Yeah, that I.
So
There
other
also
side,
we have a.
if it is the
Yeah,
blank, it will recognize immediately. No need to run that VF44.
yeah. That's all. Everything recognizes within SD. But what happens is, right, we end up finally posting the billing document, right? There also we have that document. Whatever we post, we recognize. Yeah, entirely it's based within the SD. Okay, so there is a huge difference when you come to the standard. I'll tell you how SAP was posting using that VF44 and how it is different in RAR. So anyway, we'll see that standard. We can understand. Please, SD revenue recognition is not available in S4HANA. So it means that SAP recommends to use RAR. So you, whatever you are saying, VF44, the moment you go to RAR, all these will get disabled. We cannot use RAR and VF44 together. Okay. I want to tell you information. If some companies I have seen, they are not using RAR because they want to migrate to S4HANA and use RAR. In ECC using VF44, they are indirectly they customize it such a way that it works like a IFRS 15. Okay, so that also some companies are using that one. Anyway, so the moment you migrate, you enable this RAR, whatever SD recognition we is there, that will not work. That is disabled. You must migrate from to there before you upgrade to S4.
Okay, just a question. So for activate this revenue recognition RIR, is there any activation processes
Yes,
required?
is there.
Okay,
Yes,
okay.
we have to activate that. Then this is disabled. SD based revenue recognition. Yes, what is the IFRS 50? It is a mainly the five-step concept. First, we already discussed that should be contract with customer. It can be oral, written, form, whatever it is. And contract with customer that I agreed to sell with some goods or services and agreed to buy the goods or services for some amount. And in that contract, there should be some performance obligation. That means there should be some product which you're selling to customer. There should be some service. You should be able to identify what you're selling and what. That's nothing but each of the item or service you tell to customer is called as a performance obligation, whatever is that. So you have any question? I hear some background noise. Okay, thank you. So within contract, you should be able to set what is a performance obligation. Okay, so this is a very huge definition. Uh, there are a lot of scenarios included. What is a performance obligation? So, for example, you are selling only goods to customer, then each of the product you sell to customer, each of it has its own price, then it's called as a separate performance obligation. Okay, so you should be able to identify what is performance obligation. and then you have to determine the price. Okay. So this price is also, when you create the sales order, you can see this price. Okay, this is called a transaction price. This is a price in which you issue the invoice to the customer. This is nothing but your transaction price. Whatever you invoice to customer, this is the price. And allocate the transaction price to the separate performance obligation. This is a step. This is performed within RAR. Okay. Though you may sell, say for example, some product at $100 to customer, it includes the product and the service, but you sell it at only one price. For example, I'm saying you may sell it separately, like each $50 separate. That's it. That's not. That's okay. That's not what we decide in RAR. We have to allocate the transaction price to separately. For example, there are two performance obligations in the contract. We allocate the transaction price. Okay. So allocation itself is a big concept. It's not always that you have to allocate. So allocation, if you have the transaction price, you already know that there are two products, $50 each. You can allocate directly $50 here. Or if you think that you don't know what's the price for the two, but I sold it just for 100, then you have to let RAR to allocate it based on the standalone selling price. Okay, there are two topics within this one. So this is this allocation is a major architecture in SAP RAR. So this itself is done on SAP. I will automatically allocate it based on the way we operate the business. Like if it is a bundle, then it will allocate differently using SSP. If it is not bundle, then it will allocate the transaction price separately to its POP. So these are the two, three concepts are there within this allocation. It's not that, okay, I have some price, I allocate it to the performance. No. So if say you have a contract, you have a two or three performance obligation, and you have the one price, then for each of the POB, we allocate the price. And then once you allocate, then finally what we have to do is recognize as and when POB is satisfied. You have to recognize revenue. So what is the identify the contract with customer? So contract with customer, uh, we always RAR is a dumb system. It depends on the source system. So it can be source, can be external or SD or BRIM. So say for example, in SD we create the sales orders that called as the operational contract. So or from the
Yeah,
different, yeah,
as a small clarification. So this RER applies only for IFRS 15.
yes, only
So for
IFRS
example,
15.
yeah, see IFRS 15. So other than US, right? So most of these countries will follow IFRS 15. So what about US and all? Suppose if you want to work for US, whether they can use this? They won't
Yes,
follow IFRS, right?
they follow US GAAP
Yeah.
for their only country filing. Say they have to file in New York Stock Exchange, their return, they use US
Yeah.
GAAP.
So,
They use IFRS for international. They have separate.
yeah,
Yeah,
that's my question. So if the US company, whether they can use or not?
they can use
How they are following the other accounting standard, right?
both,
US
both,
companies.
both,
Hmm?
both. They have to comply.
So
This
why they want to
IFRS
comply?
is
So if it's a US company,
international.
no, no. See, let me explain. For
Mhm.
example, there's a US company, so they operate only in US. So they don't have any other business other than US. So they will follow their country requirement, right? So in that case, so why IFRS they will follow?
Uh, that's a consulting question and why they have to follow.
I
So
still
if
had doubt.
they,
So
I
from
have a
beginning,
question.
yeah, you were saying that IFRS 15, 15. So 15 so other than US, that I'm sure on that. But US companies, so is not suitable this SAP S4HANA RER or not?
So they use a US GAAP.
Yes. So whether the gap will support or not this, whatever the software we are using.
Um, this supports only IFRS 15. They have to
Oh,
customize it. They want to make it use for the US GAAP.
okay.
This is purely IFRS 15, not US GAAP.
Okay, okay. Then got it.
This
And it is
this
only for
concept is
service based, right?
no,
Or
no, no,
all?
both, all.
Both.
Yeah. Service and products, both. And even we have this, yeah, service and product, both it is.
Okay.
Even manufacturing
I think
industries
SAP,
use this.
there's one more, right? I think SAP recently they announced EBR or something. Is it related to this one or is the new version?
EBR, I
Yeah,
don't know.
event
Maybe
based revenue. I think, yeah. I think there is
this is
service
same,
related.
you know.
Hmm?
Event-based revenue is a type of recognition, right?
Yeah,
Event-based or time-based.
yeah, not that event. I think for all service industry like banking, insurance companies, right? If they have any contracts, so they're releasing the.
No, that doesn't cover here, no. So we already told insurance is different, banking industries is different. They are governed by separate IFRS standards. This covers only IFRS 15 particularly. So if you ask me what industries, right? Mostly telecom, high-tech industries like who are selling this, for example, Apple. Apple uses IFRS, RAR. HP uses RAR, like that. This kind of companies, and Vodafone, all telecom companies. But banking industries, I don't know. I never worked in banking. They may not be using IFRS 15. They would be using the other standards. Okay.
Product and service means EMC services.
I don't know what is PMC service.
I mean, you sell the product and do some annual maintenance services, right? It will be
Yeah.
covered under the IFRS.
Yes, if there falls under IFRS 15, yes, it comes under this. You sell the product and you also provide the service annually. Yeah, that also comes under this.
But there is no value it will be shown in the at the time of product sale, right? Because you're selling the product of TV, they given 1 year
Mhm.
warranty, right? That is also one of the services. It will not show any value for the warranty.
Yeah, so
So
yeah,
it
that warranty cost indirectly included in the product price. So that I think we are going to bifurcate it based on the allocation. The third step, right? Whatever he has shown, determine transaction price. Based on that, the system will bifurcate that. Determine the transaction price. Am I correct, Jessica?
yes, so when you sell the contract with
Yes.
customer,
Yeah.
you have the separate obligation for the product, you have the obligation for the services. If we get the POB for the service, and then though we don't have any amount, but this is where we are going to allocate it. We are
So
going
that
to break down that information and
so that
allocate it to.
warranty comes under obligation of the contract, right?
But I have not seen warranty in this one. Maybe
Okay.
it's there in other companies. That I don't know. I have to check. But at least warranty, we never allocate anything.
Mhm.
So yeah. Okay. So this operational contracts is nothing but the source system operational contracts. For creating a customer orders for item 1 and 2, how we are going to recognize is, say, each item is called the POB in RAR. Item 2 is POB. Each one of it is a POB. For say example in operational contract 1, you have two items you are selling to customer. Then we create a two purpose obligation, but there will be one RAR contract. And you are also creating one more contract to the customer. It belongs to the almost the same, but timing difference. You created order and this operational contract 1, and you created operational contract too, but both should go into same revenue accounting contract. Then we can do this. We can create under the same revenue accounting contract. So you'll not be able to understand right now when I say this. Okay, I'm creating one, two, three, four. What's the difference? We have two different operational contracts. Like you're selling goods here, you're selling services. Little timing difference. You created this today and you created later, but if all this belongs to the same contract, then we can have option to create one contract. Then what's the result? Result is, go back. We told we have to allocate the transaction price to separate transaction, right? If you create all the POBs under one accounting contract, all the allocations will happen within this contract. Okay. We create two separate revenue accounting contracts. Then we allocate all the amount within 1 and 2 and within this 3 and 4. If you say that one, okay, these two belongs to the same revenue contract, but two different are created, then all we have option to create one revenue accounting contract with 1, 2, 3, 4 POBs, and all the amount we can allocate it among these four. Okay, amounts will differ. 1 and 2, if you allocate the amount within these two, amounts are different. Within these two, different. Combinedly you allocate, amounts can vary more or less. Okay? So this will help you to achieve the correct transaction price, correct allocation price for the POPs. This is more like if we have some real cases, we can take some example and understand. Okay, so this is one of the feature available. Identify contact with customer. So maybe this picture we have given that we have one operational contract. We can always create one separate contract. We have one operational contract too. We can create separate contract. We can create like this, or we can create separate contract. Both options SAP gives. So this is about the contract. Identify the contract with customer. Next, what are the performance obligations? What is performance obligation? Is like what is that you are going to sell to customer? What is you are obliged to sell? So it should have a price for you should be able to define what's the item, and that item should have the price. That's the main thing. And if both are there, then only then we'll be able to sell it. So this is a contract to the customer. Operational contract means the contract which you enter with customer. Customer can only see this phase. This is only backend. So you are selling the smartphone pack, battery, and the other charges. So each one of it, you should be able to define what is the standalone selling price. So together you sell this, then there will be some price. But if it's sell separately, you should be able to identify it. So this is the operational contract, and then based on that, we will create the revenue accounting contract in RER. Okay, so this is a pack, and we have this lead. Every time we don't need the leading POB. Yes, we have a like separate POB types, but for now you understand that yes, smartphone pack and upgrade, for example. Okay. So two different POBs we are creating. So this is not a separate. Okay, this comes under revenue accounting. Don't get into too much of this. This is one of the example. Okay, we can have like okay one service, one smartphone and battery charger and the service. Three different POBs we can create here. Like this 1, 2, 3, 4. So there is something called as upgrade rights. We cannot sell separately, right? The upgrade rights. So it is always included in the main one. That's why picture looks like. We have various examples where whatever you sell in to customer is separately, you can create separate POBs. Whatever is included in this one, so we cannot show as a separate POB, we include in the main POB. These are some examples, okay? Never get into that every time we have to be like this. It's one of the examples we are showing. So always remember that operational contract customer should have the separate performance obligations. Only that we'll be able to recognize. So there are some concepts in there in depth that we can see later, but for now you should have the understanding. So once you have the POB, identify POB standard, okay, as per the definition of IFRS, then determine the transaction price. Okay, so this is the price which I always get from the operational contract. The moment you open SD order, we have conditions, right? That itself is nothing but transaction price. Okay, so determine the transaction price and allocate the transaction price to separate performance obligation. Yes, we have to allocate it. This is a function of the RAR. Okay. So say for example, we have a two POPs and we have a contractual price of this is contractual price means this comes from the operational system. What you are selling it to the customer. This is a customer view. Okay, so you're selling this for say X amount or this amount, and then you also know what's the standalone selling price. Okay, so if you sell the only this product, what's the price? You sell only this product, what's the price? That's the price which uh, we will should be able to get from the source system, operational contracts. Then automatically SAP will allocate it. You see here, so this is the way allocate. We revenue for the this product is phone is 300 and contract is 200. This is what the how we have to report it. So this is automatically performed by SAP inside RAR. Recognize it. Okay, so previous step. So we automatically create the POBs, performance obligations. The moment you create contract, we will also create the POB, after processing. Then we have to recognize, right? We will not immediately recognize. We wait for the fulfillment events. So, for example, sales order, when you perform the goods issue or thing, we get the event. Okay, then we assume that one, okay, customer has accepted, agreed, everything. Okay, control is passed on. I want to use this word. So the moment you create a operational contract, customer won't get it. So when you actually issue the good to customer, our goods or services which customer have accepted or taken, it means that you control is lost. We have handed over to the customer and we don't have any control over it. Customer gets the control, right? This one. Then we should recognize it. As long as we hold it, customer has not received anything, then we should not recognize. This is a line we have to keep in mind, okay? So that's why we have to wait for the fulfillment events, then only we have to recognize it, especially for the event-based one. Because as long as it's within your hand, it's not controlled. The moment you issue it, it's over, customer gets the control, we have to recognize it. Okay, so that's what it is. Even the time-based. Time-based, why we have to recognize we don't need any event-based fulfillment because as time lapses, you are providing service. Every day you are providing service. End of the month, you already provided service. Over, customer has benefited from that. They will recognize it. That's the definition. So we have to recognize it every month. The moment you yes, go back to the previous step, you create the performance obligation system. It is the amount reflecting. Okay, this you recognize based on the event. But what about this? So we don't need any fulfillment event. Automatically, SAP every month it will recognize until unless you send a stop or cancel anything because it assumes that okay, you are providing service, customer is benefiting, and we have to recognize it every month over a duration of that contract. So this is a picture of the integration of operational sales billing. So we should remember that one. order and a contract. SAP sales and SD module. We always under impression that operational contracts are always created in SD. No, it can be any system. Majorly, it's tightly integrated with SD, BRIM, and there is one more is called CRM, customer relationship. But now in S4HANA, it's not much used. It's even part of the BRIM, as per my knowledge. Okay, so yes, either you're using SD or BRIM or non-SAP third-party system. That means they may be using some legacy applications. Still, we can bring that operational contract information and create and can bring that information, create all the contracts within area. So revenue accounting flexible is architecture if you see account first thing is proof of delivery. Yes, the moment you create order contract, we should also get proof of delivery and then account assignments and then contract assignments. So after creating contract, okay, there will be account assignments. Account assignment means GL account determination, profit center, and other stuff. It's a flexible framework, not much information. Just remember that various sources can be brought into order.
Ishika, one more
Yeah.
thing. So, are you covering like how the audits are created in BRIM and process to convert CA and then to RAR, or only you're covering only within the RAR part?
No, we will cover just we already have this BRIM. Also, we can yes, these two we can cover within RAR. Yes, we can. First, we start within RAR, then we go with integration.
Okay.
SD
So,
and BRIM.
so how written orders are placed, or these things will come under the source system, or returns are placed within the RAR?
No, nothing is placed. Written. That means
Yes,
customer
written.
returns.
Customer
No.
returns, yes.
No. That should be told by the source system should send that returns. Then we will
So if
reverse
there
the
is
revenue.
any upstream like Pelican or Finmart, those integrations also you'll be covering, or only the order level and revenue?
No, see, this ours is like a demo systems, right? It's like a
Mm.
training system. So all those integrations in real time we will not have it. Whatever within
Mm.
S4HANA
Mm.
we can create, that we create. Like SD orders we can create as an operational system. BRIM we can create some provider orders and then we can bring it over to area. So external, this we will not be able to give a demo. You are asking about that one, right?
Yes, yes.
No, that our demo systems won't be able to connect to this non-SAP third party.
Okay.
That only in real projects.
Mm. Okay.
But you can understand this way. Whatever they create in other party systems, how we can bring in the form of how we can create the
Like a
contracts.
simple, right?
We have understood.
See, for non-SAP systems, get the same contract, whatever the format supported by
Yeah,
SAP or upload it.
we have to create interface. There will be custom interface you create. You bring that information and store in custom table and create the RAR contract. It's the same way. How this comes in, this also comes the same way.
And how the system will connect BRIM and all are in the same system or a different system? Is IDOC or how data will come from?
No idols.
BRIM, yeah, BRIM means FICA or only BRIM?
It's
Fika
not.
only.
FICA, I
It's
think, right?
Fika.
Yeah.
So
It's
how
not the
the
other
data
way.
will go RAR? It's
Automatically.
separate
So
system, right?
SAP.
Mhm.
No. Within S4HANA also we can use. If you are using two different S4HANA boxes, then automatically it connects. But what I worked is within S4HANA where BRIM is also there, ST is also there. We have interfaces within that one. SAP standard interfaces. If you
So,
just activate enable, it will come.
so BRIM, it is also in ECC or only in S4?
It's in S4HANA, not in ECC.
Okay.
It is not there. It's in 2019, 20 it came. BRIM. 5
Okay.
years old. BRIM is nothing but, uh, uh, it's uh, it's a combination of the 4 modules in BRIM. 3 modules. One is subscription order management, and then we have this convergent charging, convergent invoicing,
Convergent invoice.
and then FICA accounting. After invoicing, we do this FICA, right?
Mm.
Where we will create a FICA contract, FICA that document, and then FAGL. Afterwards, RAR will come. So these 4 submodules together is called as a BRIM. Earlier they were part of the CRM, hybrid billing. There were so many things. Okay, so all these SAP brought under BRIM. All the subscription-based industries, right? So they were brought
Mm.
under here. And how they integrated is here they will have the after subscription-based order, then we have this provider order, like similar to sales
So,
order. So that's where is
so,
integrated to the RAR.
so Yashika, you're saying BRIM is now embedded in S4HANA, is it? It's in the same system?
Yes, yes, same system.
Okay.
Same where we have SD, same
Yeah.
place.
So in case of SD, see, for example, sales order, delivery, and billing, that data it will move easily to RAR. But in case of CRM and FICA, how it will move? Is there any separate integration or is there any RFC calls or something?
RFC calls are there on the back end. So
Mhm.
standard way it integrates. We have to enable that activation and
Oh,
then automatically they flow. Yes, RFC calls are there.
so those RFCs are given by the SAP.
Yes, standard SAP.
Okay.
Okay,
So the
so
configurations are it's fixed by the SAP or any enhancement that we can do in the BRIM
a
for
lot.
ARIA.
Oh
Mm-hmm.
my God, a lot. So it's BRIM side.
Mm-hmm.
We can BRIM is integrated to RAR as a standard way. Okay. And whatever enhancements we do for SD based in RAR, same enhancement we can do here, but enhancements are two-step in BRIM.
Mm-hmm.
So we don't directly bring the data to RAR, we stage it in one staging. From the staging, we can, you are saying like customize, we can massage the data, we can write custom programs the way we want to bring it to RAR. That area we can do a lot of enhancements in here in BRIM. Okay, so that's what like the SD also like you create the operational contracts, you can do a lot of enhancement before you bring it to revenue accounting. So here and here there is one step different, but yes, you can always at this interface level uh, before you create any data in RA, we can do enhancement. In fact, a lot of enhancements are done in projects as well. Yes, possible. Okay,
Mm-hmm.
we can do enhancements. So this we call it as a BRIM-RAR interface enhancement, SD RAR interface enhancements. You can do that. Third party anyway, it should go via custom interface.
So what is the major difference between the sales orders and the subscription orders like using in BRIM? So major difference like
Yeah, let me
how
explain.
data flow.
Sales and
Mhm.
yeah, SD distribution, so for example, you are selling on product, also you are selling that product base another product to same customer using subscription. Subscription is like a service. You
Mhm.
give the product to customer and you charge based on the usage. Okay, but sales order, you physically you sell it to customer and it is linked to the when you sell it to customer, it has a plant, right? where you
Mhm.
maintain all the data in a plant. Mm. All the material management also linked to the SD, and you
So
physically
renewals
deliver
are there in SD also, only it's available in BRIM renewal contract renewals.
both. It's renewal means here I don't know renewals, but I know about renewals in BRIM. Here it's
Yeah, I
just you have a
mean,
contract to sell.
Mhm.
Use there are different types of contracts are created in SD, but I don't have much knowledge. I know it like long-term contracts are there, like for years it runs. Like every month they keep selling to customer. I know that kind of contract. So, but I know it in BRIM for sure. I've seen renewals means say for example subscription of 1 year is over, again they can renew it. So it
Yeah.
becomes new one again.
So it considers a new contract, or the renewal happened within the same contract.
If the same contract, if say for example you entered into contract customer for 12 months, okay,
Mhm.
end of the 12 month it's over. Is
Yes.
same you cannot modify it, no. For example, after
Oh,
6 months, it
I mean,
says your
for the same contract, can we assign? I mean, we get some different provider contract that can be assigned to the same contract, or the contract we need to. I mean, for the same for the same business partner. Let's say if the business partner is only one person, so initially they have taken one subscription for 1 year. The 1 year term is ended, and they have some gap. Like after 6 months, again they came back, and then like after a month or 2 months, they came back and they want subscription again. So how it will be treated? Because the business partner will be the one person, right? So the contract, we can have multiple contracts for the business partner for the same subscription, or how they are going to handle if there is a scenario.
yeah, say after 6 months they come back. So previously, initially you created on contract that's ended, right?
Mm-hmm.
That's
Mm-hmm.
over. That life of that
Mm-hmm.
contract is over. Period is over, right? For example, you
Mm-hmm.
created to the 24 Jan to December, it's over. To 25 they came in, and business partner is a master data. Contract
Mm-hmm.
account under that one, which we use predominantly, that is also a master data. Both can be active, but your normal operational contract is ended. When they come back, again they create a one more new, because you cannot
Okay.
reopen the old one. It's over, dead it
Mhm.
is. New one you have
Okay.
to create, because you have to recognize the revenue in 2025, right? So
Mm-hmm.
24 is over. We go with the time. So answer to your question is business partner, we can reuse the same contract master data, contract account. It's called as a one more master data. We can bring that. We can reuse the same. Okay, and we can create a new uh, subscription contract, subscription order, new provider order. Yeah, the terms are almost same.
Okay.
Reuse the same master data, create a new
New
one.
one. Okay.
Yes.
So there
It's a
will be any impact on the allocations, like if there is only 1 or 2 months difference, like if the customer came back after a month or two. So if they come under the same financial year, that is there any allocation that will impact, or nothing will happen?
no, it impacts based on if you are going to change the same subscription contract. Okay, so it's there is something, right? When you create a contract, we assume that one customer will continue till end of the period. If
Mm-hmm.
they, for any reason, customer don't want to continue, then we can pause that one. We can freeze the subscription. It's like if you pause and
Mm-hmm.
then wait for 2 months, then we can resume that one. But that in that case, same contract is active. Okay, they
Okay.
can
Mhm.
customer can come back, but once contract period is over, okay, then you
And
cannot
the
use the
freezing
same.
period, it will be I mean, this is designed by SAP, or I mean, is it different for each organization?
It's
The freezing period.
the period is based on defined by organization. Like customer says that I don't want to use it for 2 months. That information should flow from the operational contract. Okay, customer is paused for
Okay.
2. Yeah, it's designed by how you create. It's designed by SAP won't design an operational contract. Okay, they have given a
What I
speech.
mean to, no, what I mean to ask is like, if there is something like if the end period of the contract is over like for 1 year, so let's say like we want to wait and check like the again the customers will come back or not, we're not sure, right? In such scenarios like we're ending the contract or like we're waiting for so particular period of 1 or 2 months and then closing the contract, that what I want to ask.
So it doesn't work that way. So if they come back again, you have to create a new one.
Mhm. Okay, so there
If
will
they
be no
come,
waiting period. So no
no,
waiting
no,
period
no,
is
no,
right.
no,
Okay.
nothing like that. So
Okay.
if you say there is a waiting period, then you have to agree with customer what type of waiting period you want to have. Everything depends on what type of contract you enter with customer. So far, what I know is once you enter into subscription contract, that 1 year
Mm-hmm.
or 2 years or 3 years, I've seen 1 to 3 years, that will be
Mm-hmm.
active until unless customer cancels it. We assume that when they are using that one, they make a money, they pay for us. If once they are not using that one, then we have to cancel that one, right?
Mm-hmm.
We cannot keep it active like that. We
Okay.
will wait for them and we cancel that one.
Okay.
So as
So and
simple as
also one more thing, just I want to get one clarity. So I want Brim and Aria, the source system will be Brim and Aria. So for the my requirement is like multi years like returns and these type of requirements I have. So are you covering all those topics or is covered in only Brim part?
multi-year subscription contract you are saying.
Like let's say might be like multi-year, like 3 years contract, and initially they have taken 3 years contract and then they cancelled after 1 year or maybe before. So how those are flown to Aria, like the
Yeah.
returns how they are placing those will be covered or not?
Yes, yes. Those are not part of this contract modifications. We can cover that one. Yeah. We will cancel that one. We create contract. So after 6 months, customer comes back and cancels. Then we will
Mm-hmm.
also have to cancel in RAS. No, we cannot show any revenue when customer cancels the contract. Yes, that is covered as a part of testing. Some scenarios.
Okay, okay, yeah, thank you.
These are very common in business as well. We usually
Mm-hmm.
see in a real time scenario. Okay. So these are
Mm-hmm.
very
Okay,
common. Like 10% of the, as per my knowledge, 10% of the contracts are always cancelled by customers. In some companies, up to 20%. Those are the real-time scenarios.
I
We
mean,
can
the
test it.
treatment will be different for SD and BRIM, right? That is what my concern. Like how the cancellation and returns and the credit memos, debit memos, those are placed in that. That will be different for BRIM and SD, or it's a similar way.
Uh, little, uh, it's little different, almost the same, but
Mm-hmm.
it's the BRIM is mainly on the services side, right? They
Mm-hmm.
don't handle physical goods. So
Yes.
yeah, little different. We also have the same one. Little different, but we use this mainly for services. If
Mm-hmm.
subscription is cancelled, modified, and even the base provider order is also modified, and the modified figure will come into RAR. Okay, so same like SD
Okay.
also same it is. But what happens, SD is mainly used today nowadays. What they are using mainly for the physical delivery of goods it involves, and for services they are using the BRIM. So,
Okay.
but finally, right, if contract is ended, we will just end the pass, okay, and we will
Mm-hmm.
also end in RAR. That information will flow from the provider order.
Okay.
And the second thing is invoicing. Invoicing is done in convergent invoicing, PICA. We
Mm-hmm.
have something called as a convergent invoicing. From there,
Yeah.
we will get the invoicing information into the RAR. ST based billing information we will get into that. Okay.
Okay.
I have some flowcharts I can show you probably during
Okay. Okay. Sure.
sessions. So what coupling of operational ST and billing and revenue recognition. So decoupling means whatever we are recognizing using VF44, all those right in ST based revenue recognition, all those are decoupled. If you want to use RAR, you have to decouple it. And that's what S4HANA, that's for the feature we have. Delivery of the goods and service, billing, account receivable. So operational side, also we create what? Operational contract, order is the first. In case it involves physical delivery of goods, then we issue it. The billing and invoicing, then it updates the accounts receivable. This is called FIGL ledger. Okay. This process, this line remains same. Only thing is that revenue recognition won't happen in operational system because we're switching off that. We are moving to the revenue RAR. So here invoice based revenue will still flow here. This is called as invoicing based revenue. And revenue based as per IFRS 15 will flow from the RAR. Okay. So here what we create is as per the IFRS 15, we create a revenue accounting contract. We allocate as per IFRS, and then we will post it to the FIGL ledger. Finally, from here also it hits FIGL. From RAR also it's FIGL. Okay, so and there is some architecture. We reverse whatever is posted here. Finally, revenue which is posted by the RAR is reported here at the end. And we also it's integrated with profitability analysis because profit center is flown from here. And if you integrate, if we have the COPA active, then all these values will flow there for management reporting. So here we multiple ledgers we can configure in from RAR. It's not that only a leading ledger and IFRS. No, we can non-leading ledger also we can configure. Multiple ledgers options is available. Okay, multiple gaps can be reported from RAR. That can also be, you can use it. Operational applications, it's just architecture, how it looks like. So this is the operational application, customer side view, customer orders. The moment you create the customer orders, so we have two parts in SAP RAR. One is adaptive reuse layer, ARL, and second part is engine. So the moment you create operational documents, say in SD or pick a third party, this is BRIM. Okay, so the operational information is automatically SAP standard way it's integrated. It will create the uh, revenue accounting items. Each of these sales order item or provider order items create corresponding revenue accounting items. Okay, so these are items. These items correspond to the operational system. Okay, so this creates a revenue accounting items. So automatically it won't. We have some configuration. Okay, we have to do some configuration here and here. Then only it will create accounting items. And here also we have to create a lot of configurations. Okay, it's not a direct. We have some prerequisites before that. Once everything is complete, then only we create items. Each of the item is nothing but it creates one POB in RAR. So this adaptive reuse layer is nothing but you're transforming the operational contract items into a RAR contract. Before you create RAR contract and POBs, this is like a middle layer, transformative layer. Okay, so this is a layer in which a lot of things happens. So the SD order item, how does SAP know that it should create POB1, item 1 to POB1, item 2 to POB2? How it replicates this information here is based on how you set up your BRF plus rules. Based on that rules, it will transform the sales order item into revenue accounting contract. This transformation rules are all maintaining BRF plus rules. Afterwards, once rules are, if you set up proper rules properly, then only all the revenue accounting items are converted, transformed into POPs. So this, the moment the transformation happens, then it goes into engine. We call it as a engine. So inside the engine, it creates the contract. It corresponds to the source system orders. One contract. So and all items in the source contract, customer contracts are comes as a performance obligation. Okay. So this is a one contract to area. So all the price allocations happen within this area contract. Okay, that's called contract management. Yes, so, and then revenue also recognize it for each of the POPs. So under this we have other topics. Okay, so invoice management. So the moment you create here, we also when you issue the invoice to customer, we bring it over here to reverse the revenue impact because of the customer. You are recognizing revenue here, and you also have the SD based P&L impact that we reverse here, so that whatever revenue is posted under this each performance obligation, this will go as per the IFRS 15 reporting. So to recognize this, we will also bring in a fulfillment for event based this posting. We, creating revenue accounting will not automatically post in a old RAR, like a classic RAR. We have to perform some steps to post the thing. But optimize it, we have option to post directly to the FHGL. So that's all it is about posting management. And when you post, automatically it will hit to the FHGL. And if your COPA is active, and it will also update the copy into COPA. So this goes in the FI accounting. Any questions?
Regarding revenue contracts, is it created in RAR or in the source level? Or
It's
revenue
created in
contract
RAR. It's
is
created in
created.
yeah.
So
Based
based
on
on
this,
the perform, I mean, based on the operational documents and
yes,
provided contracts, it will create in RAR, right?
yes, it will create. It transform those items. It will create the revenue contract.
Okay. So after processing, I mean, where exactly it will be, doing the RA contract in which step? Like if you perform, like we can see like a few steps in IFRS 15, right? So within the, I mean, ABC jobs or earlier to ABC jobs.
No, no, no. After you create contracts only, you should run this ABC. We have a program ABC, posting management steps we have to run.
So it comes under adaptive reuse layer or with, I mean,
Engine, it
after
comes.
it comes in engine. Okay.
Yeah. This is only for transformation. Before you create RAR contract, this transformation rules happens in adaptive regulator. Once it transforms into accounting contract, then only we can post it to the FAGL. Between these two
So
steps is called as the
exactly
engine and
what
posting.
comes under revenue accounting items?
The source system items. If you create the operational contracts, right, for customer, whatever
Mm-hmm.
item you're selling, for
Mm-hmm.
example, phone, services, products, all those items will come as a revenue accounting items.
Okay.
This is the operational
So
contract item.
Only so what are the data created in SDR BRIM that will flow
Yes,
to revenue accounting items?
yeah. This is like copy of the items.
Okay.
Okay.
Thank you. Yeah.
Okay, so posting management comes at the end. This is the end of that. Okay. So there is the adaptive reuse architecture. Something it looks like. This is it replicates the operating system. So we have some terms, something like the revenue coding items. We have how the automatically it will never come automatically. We have to do some setup. We create this class configuration. We generate the classes. So order we have something called as order rise, invoice rise, fulfillment rise, and invoice rise. Each of the classes we have to create and generate. This is a bit technical, okay? And then we have to maintain the rules. How each operational item has to create the POP. The rules we have to maintain here. If rules are not proper, it will not create RAR, it will throw error. So this setup is done inside this RAR, okay? And then drive processing. So how you going to bring the operational system items, okay, revenue accounting items. You can bring in the raw status, and then you can do some validations whether data is correct or not, and then uh, if there is any errors, we can always stop it there itself, okay, and then we can move. That means write processing. Inside write processing, we can do a lot of stuff. And once you process the rise, it creates the contract, okay. So before we create the rise, there is some configuration. We have to do that one. Okay, after configuration only we can bring it over here, and then we process it. Once we process, it creates a contract. Okay, so and inside also we can do the contract combination. So it allows to have the allocations properly, amounts properly. Okay, so this
So
maybe
the
look
contract combinations you're mentioning, like multiple contracts are combined, or like only the data, I mean, whatever coming from the rise that is combined in the contract combinations?
multiple RAR. So you created two different RAR contracts. You can combine that, and because it belongs to the same operational order, then we can combine with an RAR.
So these are combined based on the operational document or business partner?
Uh, Both it is.
Okay.
Okay, so yeah, this picture looks bit weird, but understand that in area and here, simple. We have to do some configuration and transfer, set up the rules properly, and we also have the option. And then during processing, we can do a lot of data validation. Okay, and if data is not meeting the validation, we can always stop it there. And you don't have to create RAR contracts. If it is a good quality data, we can create RAR contract. Okay, and then you can perform the combinations and whatever it is, and then yeah, that's the end of this adaptive reuse layer. All these things are done here. Okay, once it is done, it moves to the engine. You see here, this picture is only half here. Okay, so here we don't create RAR contract. We just use the mapping rules basically. Then it moves to the
So would
engine.
you cover from migration perspective?
Only ESD we can cover because real-time system we can't replicate. But if we can create some data without activating RAR, then it should be some old SD orders are active. Then we can activate RAR and transform it. So there's limited options for demo, but I will try to see how I can give a demo.
Thank you.
The reason is if you already moved to the RAR, right, we cannot go back to the legacy and create the data and transform it. the challenges are there for demo.
Generally, in interview, they are expecting this question, so wanted to have that understanding. Yeah.
I will see, but system already in SD based RAR, right? So
Theoretical explanation should also help to.
that, yeah,
Yeah.
that we can give. You can do one thing. So I don't know, like here demo system, they are already on RAR. So if you have any other systems like in your office or anything where RAR is not active, right? You have just the old SD based revenue recognition, then you create some data there and we will have a theoretical understanding. I'll show you. Then we have to run some transactions, then automatically activate the RAR. Then whatever migration, old data is there, right? Which are still open, that we can migrate it to the RAR.
Okay.
Yes, sir. So which version are you current? Is the 1.1? Some versions are there, right?
It's 1.3, no? We are in 1.3 plus. Latest one, 2023 agreement.
1 point. So 1.3 it will cover that optimization of contract also, right?
Yes, yes, that's right. So what happens is, if your system is already moved to the optimized, we'll not be
Mhm.
able to cover the classic. Once classic understanding is over, then we will be able to move to the optimized.
And so what is the duration of the course? How many hours?
Approximately 40 hours or maybe 5 hours more or less. Yeah.
Is the daily or weekly?
That schedule, I think you need to discuss with Naveen.
Okay.
So yeah, I think it's better to have regularly, right? Otherwise, you'll forget. If you have
Right.
weekly ones, then you will not be able to remember
Generally,
what is
timings.
done.
Yeah, timings are the batch.
We'll decide that one. You can discuss with Naveen, and Naveen is the one who will decide the timing based
Oh.
on what is agreeable to you and me and others.
Yeah.
Everyone should be available. That's the object.
And so, what about that? So, for example, if you want to set up this area, right, it requires SD knowledge, or for SD people, it requires finance knowledge. So, that config and all we need to set up, right, in the particular
Yeah.
system. So, are you
Yes.
going to help on that, or is there any document?
I have a document, and I will also take you through that.
Okay.
Yeah. Otherwise, we will not have. Simply, if I test it, no, you will not have any understanding. You have to see
And
inside.
so, and the final question. So, what are the types of business scenarios are you going to cover as part of this area training?
Uh, we will keep in mind the telecom industry,
Okay.
and that as
Yeah.
a background we will
Industry
keep.
fine. So whatever the industry, you can take scenarios like, for example, whether if there is any coverage or equipment sales or maybe service related or returns like a debit memos or credit memos. Like
Yes.
there are some scenarios, right? Pre-op goods.
So
So are you
what
going to,
scenarios?
yeah, have you identified those type of business scenarios?
Yes, we have a schedule for that one. What topics we are going to cover? It's there at the end of the slide. I can show you that one. Whatever you are
Okay.
saying is covered in that one.
Okay. Okay. Fine.
Okay,
Thank
so
you.
you
And
can.
also regarding the
Yeah.
demo system, so the demo system is available only for SD to RAR or and also for other BRIM to RAR as well.
It's available for BRIM to RAR as well.
Okay, okay, thank
Yeah.
you.
Mhm.
Apart
So
from
when
this 40 hours section, like is there any workout sections, like any live sections, like any live examples that will be taking and covered, or only covering only theoretical on this 45 hours section?
no theoretical. We just something like this. We see, we understand one process, and we go and test that in the system. It's like that. No
No.
theoretical.
Is there
It's
any
like
like doubt clarification? I mean, any separate sections, or it will be covered within the class timings?
yes. For example, we cover one topic today. You can practice it, and next day morning, like first 15-20 minutes, we can use it for clarification.
Okay,
That's how
okay,
we do it. Or we can
No,
have separate if you still want
yeah,
something at the end we can have 1 or 2 hour
I
session.
think
Totally
I
agree.
think it's better to have separate sections because everyone will have different kind of questions. So that I think it is not possible for you cover everything in one section, right?
Yes, if it is a common topics which in the interest of time we have to move. Yes, if they're common topics and if it can cover in 5 to 5 minutes or
Um,
so, that we can have
mm,
it. If it requires in-depth, for example, you're trying some scenario within that and
mm,
that we cannot postpone the session, right? Topics. That we can
mm,
have a separate session like that it is.
no, no.
Depends on type of query you have.
I mean, if it possible, I think, I don't know whether it's LN process or not. So let's say like you have within a week, like you have 5 sections regarding the classes, and then any one workout section that will be really great.
Uh, See, workout means we will understand the process flow, then we will get into system. It's like that. It's
Mm.
both we'll be doing inside system and we understand theoretically as well, like that. It's not always
Okay.
running PPTs, never.
Okay.
It's together we have that one.
Mhm, mhm. But
So we will.
some people, what I say, some people are interested in, using SD and ARIA, some in BRIM and ARIA. Like, are you covering both together in one section, or you're taking like a different, classes for both SD and ARIA, BRIM?
Uh, we'll cover first ESD and then we'll move to the BRIM. Both
Oh,
are covered.
okay. Yeah. Okay.
Only
Yeah.
thing is
Right.
that third party one I will not be able to cover. Third party
Mm.
one is like directly within our year we have to test it. It's assuming that third party, as if third party is sending us the data. Because those are all in real project happens in demo systems I cannot show you beyond
So we'll be able to simulate it in AR, in that
ARL.
layer, right?
Yes,
AR
yes,
layer.
yes. We have a test, we can create the test rise and simulate in ARL.
Okay. So we'll have to do the mapping of kind of. So you said there is some customization or
Yes.
something that needs to be done, right? We'll be able to do that, right, and simulate it.
Yes, yes. See, whatever customization you do in ARL, right? Especially I'm
Yeah.
talking about a RAI class, RAI setup, and then BRFS. The same setup can be used for SD and BRIM as well. Similar setup.
Okay.
Okay?
Okay.
Almost the same.
But with third party, you said you need to do a little more customization or something, right?
No, no,
Uh,
in third party means it's like we'll not be able to demo that one. We
yeah,
directly
but then we can load
test
it.
in
We
ARIA.
can load. Okay. I mean, when you load it, it will be in different format, right? So,
Yes.
how is it like?
Format.
So we'll be able to transform it into the format which is readable by ARL. Uh, is that how we are going to do it, or we'll upload it in already in the format which is recognizable?
We load it spreadsheets. It
Okay.
takes that spreadsheets.
Okay.
Yeah, just load it with spreadsheet and we can see how it is transforming on the routes and creating RAR contracts.
Okay.
In fact, most scenarios we can directly load in RAR and understand. We don't have to wait for SD to send it or BRIM to send it. Because some scenarios, most of the time we can replicate from SD and BRIM. If we cannot by chance replicate from there, directly we can create within RAR and we can load it using spreadsheets.
Okay. So, from SD to RAR integration, right? So, would you cover all the types of flows, like, service flows and the milestone flows, or it is just specifically the tangible good flow uh,
No,
that we will?
we'll cover this physical one and the
Okay.
services one.
Okay.
The one it's like every month we have recurring billing is there, right?
Right.
Recurring one, Yeah, these two we can cover.
Okay.
And this percentage of completion is there, right? So there are a lot
POP.
of
Yeah.
integration with other things that we will directly learn within RER, like how we can do the percentage of completion. So I
Okay.
will not be able to set up like, okay, there are some other modules, right? So contract something is there. I forgot that one. Some other modules are there. We have to do a lot of configuration there to bring that percent of completion. So those specific cases we can directly learn how to create, how it works by loading the Excel sheet rise into RA. Directly we load
But
and see the percent of
but
completion.
theoretically, will you be able to explain how we'll be configuring that
Yes,
in the SD or SD or
yes, yes.
S4?
SD
Okay.
not only theoretical, SD and BRIM 1 we will directly see in system as well.
Yeah, I
How
mean
it
the
is, not
POP
only
setup.
theoretical.
So I mean the POP setup you just mentioned, which was pretty hard to replicate. So that at least
Ah,
theoretically we'll be able to cover.
yes,
Uh,
yes,
okay.
yes. Especially the percentage of completion, right? Yeah.
Yeah.
Even last class we did like that. Directly we covered within RAR. Only that case. Percentage of completion.
Okay.
Okay, so we are in this slide. Okay, adaptive reuse layer. So we can do a lot of stuff within this one. So BRF plus rule determine. One thing we have to learn in IARL is we have how to set up the BRF rules to transfer the accounting items into RAR into POPs. That's the main thing here. Okay. So once you
So
create,
baddies are enhancements, or is there some different thing? Baddie.
bodies are enhancements. They are
So
enhancements.
what is the full abbreviation of baddie?
Business add-ins. Business add-in. So it's
Business.
like, yeah. So for example, they are used for various purposes. Various bodies SAP has given. It's not that one which will fit one for all. One is when you bring in the revenue accounting items, we have a body where to enrich the items. Enrichment bodies are there. Validation, some wrong data is coming, then we should be able to identify and throw an error. That's another one. And then you have invoice distribution, like 10, almost like 7, 8 bodies or 10 bodies are there. So
It's like if there is any issue within before processing revenue accounting. So is there any error or anything? So the baddie will throw an error before flowing. That is what you're meaning to say.
So standard errors automatically will take care. We don't have to do any bodies, but there are some
Okay.
project specific, company specific, like your own specific errors you want to define, and you want the system to throw that error. Then we can use these bodies. That's
Okay.
one
Okay.
thing.
Okay.
Yeah.
Fury
That's
Like
apps
one
are
more
available
thing.
for RA.
monitoring or something, right? This is like monitoring part.
Yeah, we have our bodies in inbound processing. That's for monitoring. We have some bodies at the contract creation. Okay, those are for different one. Yeah,
Oh,
we
Fury
have
apps are
some.
available for RAR.
Yes, yes. Oh, there are a lot. 65 or 70 apps are there. Fury apps are there. We have Fury apps nowadays coming to do only configuration. Fury apps to process the data. Fury apps for reporting. Fury apps for everything. Yeah, we have Fury
so,
apps.
so if I'm not wrong, like we have, now configurations, everything in Fury, right? In S4HANA, apart from tables and everything, we're going to Fury apps only, right? Everything available
Uh,
in Fury, right?
yeah, it depends. We can use Fury apps or we can use GUI old way. Can use both. For
Oh,
learning, you have to learn both GUI and Fury apps, or you can learn only Fury apps. That's the idea. But for testing, yes, we use GUI mainly. We can also see the Fury apps because GUI is very fast, no?
yeah.
That's why for
So
testing
is
we
there
use the
any
GUI.
challenges like between the using the standard SAP and the Fury apps? Like, is there any challenges like any like if we want to make any configurations or something that we can do in Fury or only in GUI?
Uh, some apps they have given there we can. I don't recollect how many configuration apps they have given. So
Mm-hmm.
wherever is possible you can use, but GUI is very fast.
Mm-hmm. Okay.
Yeah. GUI is real. Even today we also use the GUI. It's very fast.
So are you
There
going
is
to
no.
provide any cheat sheet like I mean all the T codes like something similar one or
Yes, yes. We do have
okay.
that
So
sheet. I can share that.
okay. Thank you.
Okay, so revenue accounting inside the architecture, it's something looks like this after ARL. So it's mainly to understand what covers in contract management. The initially process we have invoice management, fulfillment management. Okay, so we will learn about all these. Okay, once you create the POBs, okay, what are the invoicing events, what are fulfillment events, and this too also will cover it. And it's important to learn not only how to create RAR content, but we need to learn about this too. Then only we will understand why is that, why we have to do this, why we have to bring in these events. Yeah, and this is what, okay, at the end we do the posting management. I think the seen in previous slide is more like a better visual. And deployment options. For integrated system, we have a standard RFC called revenue accounting. This is in ECC, but now we are in S4HANA. So we will use S4HANA for learning. This is like old one. But there is a question always comes in. Can we use a multiple external system into area? Yes, you can use multiple at the same time. Okay. So multiple means revenue accounting via RFC. You can same time multiple systems means integration component separate instance. So sometimes we can use the ST operational systems like ST and BRIM and RAR in the same system, or ST in separate system and RAR in separate system. That also can be used in reality, in real life. You can create the BRIM or ST orders in one SAP, and via standard RFC, you can bring that data into separate S4HANA instance where only revenue accounting is there, like a finance one, and that also you can use it. Or everything you can do in one system. So SAP supports the both.
So
So what
in
is
terms of
preferred? Yeah.
sorry, so from now this public cloud, private cloud, is there how would this would differentiate from our air perspective?
I have not seen a public cloud, but whatever we seeing is more like a private, right? So on premise, like a more private. How the architecture is different in public cloud, because I have not tested anything in public cloud. So what is the
Okay.
preferred is, yeah, preferred is better. You have the RAR where ST and BRIM are also in the same instance, the same system. That's a preferred. So you will be able to see back and forth what is happening. Otherwise, you have to log into different systems to see. The most preferred, and nowadays most companies are going with this one. They have the RAR in the same system where you create the ST order, same system where you create the uh, provider contracts. That's So these are various Fury apps you can see. It gives a nice, it's mainly end user, right? You can, so it will give you a nice view of the data, customer wise, and it gives this one. Anyway, this is mainly for the end users where they can make a meaningful, they can use this information, these charts. Revenue recognition. So once you create all the items in RAR, when you process, everything is done at the end, we will post to FIGL. So it's everything is much automated. We don't have to do anything. So advantage of using RAR is that it will help you to comply mainly. It's mainly a compliance thing, not for the anything. It's mainly to compliance, and it will post as per IFRS. So if you do the proper configuration, if you understand the business process too properly, it will help in complying. There won't be any issue. Okay, so that's how it works. So if you don't set up properly, if you don't do anything properly, then even whatever revenue is coming out of RER will also have the issues. It will never be compliant. So we should never assume that it's always RER is always correct. Yes, it's correct if you properly set up, understand business process, then it will help the a business a better way. Okay? There it will reduce the manual work for them. That's the advantage. So what are the topics covered under this training? So first we will see the outlining SAP revenue accounting and its architect. Yes, we understand the standard in depth and then its architecture and their components. You see here we have SD, BRIM, integration external, and in optimized. Inbound processing, both optimized and classic. So when you start, right, usually we can show you the classic, but I cannot activate optimizer and show you. Reason is once you activate optimizer, we cannot go back to the classic. That's why this we will theoretically learn initially optimizer. Later, once you activate it, we can really see how it works. So
So, so you're saying like we will not be covering the optimizer scenarios, or
first we
we'll
will
do it
cover
later?
classic. First
Okay.
we will cover the classic, and then we will activate this optimizer. We have a hybrid. We can use
Okay.
inbound processing and optimizer contract management. We have one more is we inbound processing also will change it for the optimized. That means the way
Okay.
we bring data to the RER itself is in optimized. Once we do
Okay.
this, we cannot go back to the classic. So you will not be able to see this one, no? That's why we will see everything in classic, then we will move to the optimized. We see how data is coming. But once you create the RER content, it's same. Whether you this one or that, and the end results are same. Contract.
Okay.
So we have to go step by step. Yeah.
So, let's say when we are practicing, when you say that once you activate optimizer, we will not be able to go back. So, uh, I mean, is it like you're resetting it for every batch, or is there an option like that? Because when you say you cannot go back,
Yeah, there
how
is
are we
some little
starting?
bit code is required. Uh,
Oh, okay.
Class. Yeah, that yes, Navin will help us.
Okay. Okay.
Help of the developer. Since I'm
Okay.
functional consultant, I will not be able to do. I think they
Okay.
will help in system.
Okay. Okay.
In inbound process, these are the topics we are going to cover. Import structures, item monitor, and inside the monitor, we understand how to use this monitor, how to transfer one process, and return orders. Okay. And this is mainly use it for testing and BRF plus. Yeah, and overview and configuration optimized. The only thing is that this optimized, we have to keep it at the end after classic. Contract management, we cover this, what are the definition of POB and how to navigate it, and creating outline revenue contract navigation, how to create manual contract combination. Just and we also have this creating cost recognition. So you can also learn about this cost concepts, especially using the EST one. Okay. So understand rate of return. What is about rate of return? How to achieve this scenario? Monitoring. So freeze and unskip subscription and price allocation. So how SAP allocates the prices? Okay, that we will understand this. And then contract modification, yes, modifications, how SAP handles some modifications, what type of modifications automatically it updates, what type of modifications it will not allow, and that also we see. Okay, what it allows, what it doesn't allow. Next is fulfillment. Yes, once contract is done, how we handle these fulfillment events and the invoicing event. Okay, how do we post that one? Is about that. And then finally, revenue postings. What is the postings? How does we understand these topics? Then we'll see in system as well. There is one important topic here. We call it as a contract asset liability. Some companies also use this unbilled or deferred revenue. So that's about, so both little difference is there between, if you say that we are not using contract asset liability, we are using unbilled and deferred. So then there is a slight difference. But first we will use as a standard part this contract asset liability. We can also change this reference to the UBSO or this one. Okay, we can understand both. We'll understand, what is it. Until unless you have some background, you will not be able to know what is this about. Okay? And processing, posting, handling foreign currencies, period and closing. And then reconciliation, yes, between order system and RAR, if there are any consistency, any gaps, this report will help. We have some standard SAP reports that we will look into that. So yes, migration also we covered. It's like understanding how migration. There are two migrations. One is if you are using legacy SD thing, then how to migrate it. So there are some steps that we'll understand. And once you're already in RAR, in the classic, then how you can migrate it to the optimized. Both the migrations will understand this topic. Next is BRF plus. Yes, this is very important. We have two type BRF plus. I think I didn't update topic. One is how you transform the source system items into RAR contracts, and then how second BRF plus application is the account determination. So we need to know how to set up the account determination, how to create the POB structure, how to update. There are two different applications within this one. So then SD integration with that, yes. So we have to activate it and maintain some rules, maintain some uh, which order type is relevant for RER that we have to maintain. Okay, and SD side also we have a GL account determination, and FICA side also we have a GL account determination. Okay, so all these are covered in. Okay. And finally, yes, once we switch from classic to optimizer, we'll be able to uh, have some demos, and we'll also understand the what are features in OCM and what are the table structures. Some tables have changed. Okay, the tables we understand that, and some features, especially like day-based contract modification, that we can understand like whatever feature. There are many features SAP has given. We can understand that table structures, migration, and there are some Fury apps. Only if you activate OCM, we can use that. So that also we can see. Okay, if you use Classic, there are some special apps only for Classic. That also will be able to see and understand. That's it. If you have any questions, you can ask me. Hello.
Yes, yes, Sheikh.
Yeah, yes, yeah.
So when is the batch will start? Is already
We have to check with Naveen for that.
okay.
Contact Naveen for all those details. He'll be able to help you with all the schedules.
Okay.
And what will be the duration of each section?
See, this we have around like 50 topics, right? More or less.
Yes.
Some topics will take more time, some topics will take less time. So each one will be like hour or 2 hours like that. Especially BRF that takes more time. We'll spend more time there. Some of them class configurations and all take less time. We will spend only few minutes there. And we'll try to see how much we can demo, like one scenario we can demo like that. Some topics take more time, some topics less time. You can keep around half an hour, 1 hour, 1 hour topic.
I mean, daily section, like if there is a daily class, like what will be like it's for 1 hour or 2 hours? Like
Oh, that
you're
one.
taking it, yeah.
Not full day, but that will be crazy. Depends
Not
what
full,
two
like
hours is
1 hour or two. Mhm.
2 hours. 1 hour is too short. No, will not be
Yeah,
able to complete one topic.
complete.
Uh,
Yes.
my preferred choice is 2 hours, but let's talk to Naveen as well. What he says. He's the one who organizes. He's the
Oh,
one who
oh,
manages this. What is acceptable to everyone?
no.
To me, it's like 2 hours is nice time we can cover meaningfully. 1 hour is very short.
Yes.
That's it. Any more questions?
Okay. Thank you, Sheikh. Yes, Sheikh.
Yeah.
Thank
Naveen,
you.
back to you. I think Naveen is not online. Anyway, thank you all for this
Thank you.
attending
Thank
this
you.
session.
Thanks a lot for your time, Isha.
Hello, hi, good morning, you all.
Hi, Shiga.
Morning.
Morning. Yeah. Shall we start? To wait. Hello, hi, good morning. So let me share my screen. Hi, Nitin.
Hi.
Hello, hi. How do I say this name? Sai the same.
Fine. You can call me Sai.
Sai. Yeah, hi,
Yeah.
Sai. Nitin. You can see my presentation, right?
Yes, I can.
Okay. So let me run through this one. So what are the topics that we are going to cover as a part of the training? This is already communicated to you, just I am giving the same slide. So we start with outlining again, like what is RAR standard and its architecture in the SAP. And then once we understand this, we have to move how integration with sender components. It's like how data from the operational systems, it is sent to the RAR. Okay, so and then we'll see the optimizer versus classic, module 3, and then contract management, price allocation, and contract change. So some of the topics, right? So when we're explaining, maybe like price allocation, we can cover here based on this one. Some topics can move back and forth, but mostly we'll follow this order. Okay, in case it moves up and front, again I will try to refresh. Okay. So what's the basic of integration sender components, inbound processing, contract management, allocation, fulfillment? These are the basics of RAR. Okay, so this without creating, nothing. This is a more special part of the RAR. This is the basic. And it continue, and the end what we do is after creating all the data, contracts, everything, at the end we have to move this whatever we posted. Okay, we will send it to the FIGL for the final reporting. So this is at the end. Then later we'll move into the other topics like how to do reconciliation. What is sent by the operation system, what we have received in RAR, what is again sent to the final FIGL. This three-way reconciliation, the SAP has given some standard and some can be developed in the projects. And then any questions?
No.
Okay. So finally, once we till here, this is the transactional postings. After this, these are the reconciliation we do, reporting, migration. Migration is like a one-time activity in the system. So this is what SAP standard gives. and to the extent I know customizing thing also I can show. And SAP BR plus overview think we already have here, transforming data, but some more details I will try to share with SAP BR plus overview, but I will try to cover here and then give more details. And then SAP RAR integration with SD and BRIM. Yes, we have a SD as well as a BRIM. This is a standard SAP gives integration with the BRIM. So while we are talking, right, we can talk with explaining, how we bring the data from this sender component. Sender here is SD and the BRIM. So we also touch some of the integration points. It means that these topics will be covered here also, but at the end also as a end-to-end what configuration is required, that also we will show you. Okay. So while we're talking, we'll talk how operational sense, that itself is like integration. Since we have to break down the topics we have given, but this will be covered while explaining these topics, wherever relevant, so that you will also get to learn from here as well as the separate session. That will help you to remember. So later we go with the optimizer contract management. So right now our system we already in the OCM. So whatever we create with sender from the BRIM or SD, it's going to create an optimized. To learn the classic, we have to manually upload it. We'll try to see how to roll back what we have already implemented optimized. Okay, so we'll try it today and we'll show you. So currently this also we can learn. I have some documents around this OCM. We will see what features they have given, and we'll also test in the system how other features look like to the benefits in customers. So before we start the sessions, any questions?
No, Yashika.
Great, thank you. Let's start. So first and foremost thing what we discussed today is overview and architecture. It looks like any other module anywhere, overview will be there, architecture will be there. How it will help you? I'll explain you. If you don't understand this outline, reporting, architecture, the whatever we do here, you will not be able to completely make sense of any of these topics. So if you thoroughly understand this one, what we do here also makes sense for us. Why we do this? That's why this topic one is, it will help as a functional consultant when you go and present area to the clients or customers. This is thoroughly, they don't get into all the technicals, but they like to understand what is there in SAP revenue architecture and the architectures. They know it, their standard, they may know it, they may not be knowing half it, but this is a very important. Once you know this, then only other topics will make sense to us. That's why we have to start with overview and the architecture. So let's see the outlining the SAP revenue accounting and reporting and its architecture. So what is this SAP revenue accounting? So there are many tools available outside SAP. So SAP is with clients or customers who are looking to, who are already using SAP as their ERP system. Then this is a part of the package. It comes, it's embedded, in S4HANA from 1809 onwards. So SAP is making it, they're recommending that use the revenue accounting. So let's understand what SAP says. This International Accounting Standard Boards. This is nothing but international. There is a board which specifies what globally all companies should follow accounting standard. That's called an International Accounting Standard Board. And the US has the one accounting standard board. Similarly, India also have. But these two boards have jointly issued a revenue accounting standard. So that's why These two together they work, but this you can understand. Okay, International Accounting Standard issued IFRS 15, where globally all companies have to apply. But US Financial Accounting also issued IFRS, but their standard is AAC 606. Okay. Anyway, jointly they have developed this IFRS 15, but whatever is US Financial Standard Board has developed, the accounting standard ASC, let me slash this ASC, it is there in other sessions as well. Okay, IFRS 15 is applicable globally across all companies. And the US, whatever US Financial Standard Board has issued the standard, right? They're almost same. Only few disclosures are different. That is applicable to the US entities. So that's why wherever you read a US Accounting Standard Board and IFRS 15, they jointly developed. That's why everywhere in the blogs, anywhere you see that standard, they together they mentioned, but do not get confused. So IFRS is applicable globally. Anything issued by US Financial Standard Board that is similar, 90% same. The 10% is applicable only to the US companies. Accordingly, you have to understand. Okay, so our SAP, our RAR SAP is compliant of this IFRS 15. Okay. So what are the main functionalities? It is designed as a submodule. First and foremost thing you have to understand is, do not get confused that, okay, this is part of the SD. No, this is not part of the SD. This is separate, detached from the other. It's like a submodule. So it means as a functional consultant, can whole life you can work as a revenue accounting consultant, like finance FI consultant, CO consultant, BRIM consultant, functional consultant, right? So consultant, like that, RAR consultant. It means it itself is a subledger. It's a separate module, and but it's a part of the accounting. Okay, first and foremost, it's a separate submodule. So revenue account is decoupled from operating. As we told earlier, it was part of the SD, and to comply with IFRS 15, they decoupled it, because within SD, if they bring in, then it becomes more like a SD, right? So nowadays, SAP is pushing the clients to use the BRIM, which our companies are big organizations, have millions of data, right? So SD hangs a little bit. That's why they are suggesting them to use the BRIM. BRIM is mainly, it's a separate module by itself. It's a lot of stuff. So mainly it is used for the subscription-based industry. It's a replacement of earlier CRM. So since earlier, before RAR, revenue accounting was a part of SD. Now they decoupled a separate model so that we can, RAR is integrated with CRM, BRIM, external systems, anything. Okay, multiple. So it is integrated non-SAP as well. It means that if some clients are using, say they have their own legacy systems, they can be using even DAX, that's also a popular accounting application, DAX, DACX, something. It's non-SAP system. Or if they're using something else, from there also, if they want to use only RAR, they can still bring it over operational data from non-SAP and recognize the revenue as per IFRS in the SAP. Okay. So, and another feature is allocates the transaction by two distinct items. We'll go into in-depth details. This is the main feature, one of the key features of IFRS. Though it is submodule, separate application, non-system, what's special about IFRS is allocation of the transaction by two distinct items. Let me explain you in the next slides. I will explain you why we have to allocate and what's the meaning of the distinct items. Okay, for now you remember this point, but I will explain in detail next. This is one of the fundamental points in that IFRS 15. Okay, so next is combine from different applications. Okay, if there is any requirement, we can combine. So how we can apply, what cases are there, that also we see later. Parallel accounting. Yes, parallel accounting means we have RAR, SAP, we can use for IFRS. Also, if companies located in some regions, like they have to comply with IFRS 15, also they need to comply with other accounting principles. In that case, SAP can be, RAR can be used for reporting in multiple accounting principles. Not restricted, oh, okay, SAP RAR is only IFRS. No. We can use this for multiple accounting principles, multiple ledgers we can post. So it's like,
Ishika, on that front, so RAR is primarily designed for IFRS 15, right? So when you say other accounting principles, like it supports other accounting principles as well, does it?
yeah, we can also report as per other accounting principles. Let me show you how it is. We have something like this. We can configure multiple accounting principles, and one order we can post in multiple accounting principles as well. Each principle is linked to the separate ledgers, right? From the FI configuration, if you so every IFRS is mainly used for the leading ledger, and non-leading ledgers they use some other accounting principle, normally globally. So each accounting principle is linked to the ledger, and whatever we post is at the principal level. So the principal linked to the ledger will get the final FI postings. So for example, if you are using this IFRS only, then and you link that leading ledger to the accounting principle IFRS, then all the SAP revenue will go only leading ledger. If you want to report it to the non-leading ledger, then again you have to manually do some month-end adjustments and do that one. So that's why SAP gives, okay, it's not only leading ledger accounting principle IFRS 15, non-leading ledgers, if we have different accounting principle, that also we can bring it over to the SAP. It will post to the different ledgers in a universal AC DOCA table in the reporting.
So basically, I mean, RAR allows you to post to different principles if you select based on what you select. That's what you're trying to say.
Yes.
Okay, even gap is also kind of.
Yeah. Otherwise, what happens? That's the question, right? If you use RAR IFRS 15, only you will be end up posting to that ledger where your accounting principle is linked. And what about if you want to comply with the other ledgers? You download these reports, and some extra massaging they have to do, they will do it at the end. So it'll add little work to the accountants. So if you bring it over all accounting principles, they can use it directly, take the report and download and report it. It allows. That's the question.
So best practice is like, people, let's say in US, they activate IFRS and gap, is it?
Yeah, they activate both. I've seen both. I've seen single as well. So sometimes some companies use RAR only for IFRS earlier, and for other gaps, from IFRS they take and they do the back adjustments to the IFRS to get the local gap. Nowadays,
but then if you have this option, why is that companies want to do it outside? Is there any constraint, or is there any cons in using SAP for posting multiple in that case?
one is the data in AC DOCA. you will get millions of, let me open the spreadsheet. I think I need to open here. One reason if they don't want to use it could be the one is, so if you see the table level, so if every ledger wise revenue will be posted. That means each line will contain one ledger, and if two principals with two ledgers means two line items for the same revenue. But of course, at the month end, everything. So, data footprint is a main reason which some companies avoid. They just post it to the leading ledger and they do it. Otherwise, some companies, what they do, right? This accounting principle, they will assign it to the one ledger group where all ledgers will be there in that. Okay, so that's something. For me, the only reason what I understand is data footprint is the one. If you look at the AC Doka, how it posts generally. So see any data you take, okay, some we posted. You see here ledger wise. It will post ledger wise. So that's where data footprint will be too heavy, and if they cannot manage this data partitioning and the backing up, they will go with one, because revenue as a whole will have billions of items in retail industry and other industries. See, ledger wise it will post. So if you bring in the two accounting principles, two different ledgers,
Yashika?
Oh, hi.
Yeah. Yeah.
Hey, hi, Shiga.
Naveen, Sai.
Yeah, we can hear you now.
Yeah, we can hear you now.
Yeah, sorry, there was I don't know what was the issue, but anyway, I'm back. So that's what I was explaining you. The more number of principles, like if you activate 3 different principles, 3 different ledgers, and it will duplicate or take IFRS as a backup, and then they do these local adjustments annually. They have some other applications and they compare it. So both the
So,
cases, it's possible.
so basically, I mean, what I understood is, for every posting, it creates duplicate line items, right? So the footprint kind of increases. So people export the IFRS entries and then they do this massaging and they do one posting, right? One shot posting.
Yes. For example, if as per IFRS 15, revenue, it is say something, it is 100 million USD, USD 100 million. Let's say if they got it via RAR, and maybe local gap, they have to report something like a 90 million, because they have some principles where it doesn't allow them to recognize that 10 million. So this 10 million is adjustment. They know it. They do it. This 10 million adjustment. So manually by accountants.
So
Or
is this the invoice amount a 90M local gap or different?
yeah, some of the revenue as per the whatever IFRS we call it, right? So maybe it's not applicable in the local gap. That's why they say, okay, the difference is you cannot recognize 100 million as per IFRS, you recognize only the 90 million. 10 million, you reverse it. Okay, so that reversal is something they do it. So example, what example I can give, thinking. Right now I don't have any examples, but it's there are many cases where 100% of IFRS, what IFRS says, once we understand this principle, we'll get back to it. I have some examples I want to share. Right now, let me give you. Okay, IFRS says it's 90 million. We'll take example, and a local gap is 110 million. So from where this they got some additional revenue as per the local gap. So why? Because IFRS we can recognize only if we have the, let's go to the 5 step, when you have the contracts. So revenue from contracts. Revenue from contract. That's what IFRS principle says. We'll go to that. Here, revenue from contracts plus ad hoc non-contract revenue. Also, they have to recognize as a thing. In that case, local gap, some 10 million additional revenue, they will report it. So as per IFRS, okay, only if you have some contracts, you can recognize it. Okay, formal way of thing. Local gap, everything that local registration says, whatever you earn in the form of revenue from your operational revenue from your customers, whether with contract or without contract, you have to report it. That is a case. Then what happens? They need to report it 10 million. This 10 million could be that some sales orders not coming into the revenue only contract directly, they will go in the SD itself. That also they will add up. Okay, those are very practical cases I've seen. Understood?
So where the adjustment was made exactly, the 10M from the source level like SD or
Yeah.
from the RAR?
Yes. So instead of we call adjustments, we never do any adjustments in the RER first.
Yeah.
And why? Because the way we configure our systems is we just say what we have to bring it into the RER from the source system. So this is what we learn in the integrations. Integrations of ESD or BRIM. So for example, if there are 10 types of orders here, okay, companies using only 5 is relevant for IFRS, other 5 not relevant for IFRS, then directly they will show more here. Okay, so that is something we will learn. If I go back here, we have here, right, activate integration with revenue accounting, here define RC, here when we activate it, right, what is relevant for IFRS 15, that only companies will activate it generally. What doesn't come under IFRS, it goes to local GAAP. If they don't want to use RER for local GAAP, they will not bring it to this one. For example, sale of a byproduct in the company. That if they have some byproduct or it's in a once in a while they sell it, accumulate at the end of the year they sell it. That's one example. Or they have a lot of what you say, manufacturing, they have some lot of scrap, right? Lot of scrap, they deal with that. At the end of the once a month they will do it. That's not a selling of the scrap is not a regular operational revenue. There is no contract suddenly that okay that comes. That's why all those some special ad hoc cases they will not bring into RER, and that will go directly into the gap reporting. Some examples I'm giving you what I've seen. Some fines you impose on customer for violating the contracts. So that fines are never part of the contract, right? It is part of the contract only when you violate, but they are not part of your operational revenue. So those fines, those penalties, those things, they are directly recognized based on the SD revenue. They will not come into the area. That could be, these are the drivers for difference between the total revenue and the revenue reported out of the IFRS. Understood? There are many cases like this. Every project I hear one or other cases. Okay. So clear it is. So you'll be clear. Yeah.
Yeah. Sorry. Please go ahead. I'll ask later.
No, you can.
So you said like, yeah, I mean, let's if you're reporting in a different accounting standard, you take it out and then you just post adjustment, right? Let's say if you activate both GAAP and IFRS, so there will be double postings in ACC Docker, right? So
Yes.
how would that be adjusted? Like, so would you select one standard accounting standard and like one preferred or default accounting standard, and then you will kind of offset the other postings? For example, if GAAP was the standard, yeah, if GAAP was the standard, and IFRS is, of course, you're activating both. So would you offset the IFRS posting somehow, and you will just eventually the effectors only of the GAAP? Then how it works?
Okay, after posting in AC Docker, further how they do final reporting. So
correct.
Okay, what they do is whatever we post in AC Docker is not end of it. They will build some practically how it happens is you have operational system, right? Either you use SD or any source systems where orders are generated. You know this where. So from there they take a full revenue and they compare with IFRS and make adjustment. First level of adjustments is they do is make adjustment if any revenue missing from RAR. This is the first for the IFRS. The two adjustment they do. One is for IFRS 15 one adjustment, one is for local GAAP. And they take the source system total revenue and they compare take the full revenue, so take the full revenue and check what is posted in AC TOCA for the gap. And any difference, they post manual entries. So this is one way, this is practically, this is what every company at the month end they do it. So they take, it's not that, okay, what we post in AC TOCA will give visibility of what is, but what is missing, what adjustment they need to do is based on the total revenue, what they have issued the orders, whether ESD or it is some other source applications. Nowadays they use, yeah, that's how they compare and make adjustments to whatever.
So what I meant is, now we are talking about a case where only one accounting standard is activated, right? Which is by default, let's say, if it's IFRS 15.
Yes.
You also mentioned, like, you could activate two standards, which obviously increases the data print. But let's say if IFRS 15 and GAAP is activated at RAR level, it means like there will be two postings, right? Going into SAP TOCA, one for IFRS and one for GAAP. So that's more like duplication, right? Duplicate postings, isn't it?
Exactly, it's a duplicate posting.
So one posting has to be offsetted, right? So what happens? I mean, in that case, like, so how system will automatically offset the posting, or you have to offset the posting which is for which you are not reporting. For example, IFRS you are not reporting, you're reporting for GAAP. How does that work? Is what I was trying to ask.
I didn't get your question. So yes, so we activate only one standard, then it will post only as per IFRS 15, and we have only one entry in our.
Yeah, if it is two, there are two entries, right?
Yes, two means two different ledgers, two different entries.
Two different ledgers. So wouldn't it be more like
Data
I mean, are the posting to these ledgers is it going into your balance sheet, P&L, or it's just a statutory posting?
No.
Is it a real financial item, these postings, or I'm not from a FI background, so pretty weak at it. I'm just trying to understand.
I'll explain. So in AC TOCA, you see the ledger, leading ledger, IFRS 15. So, and GAAP, that means is a non-leading ledger, non-LEL, non-leading. So there are two entries here. So item 1, item 2. So both, so it's a document is same. Okay, so when you post financial FI entry, right? FI entry is one document. Okay, for both document number one. So at the back end, it will update. Both ledgers both ledgers at table level. So though it will post only one, it will update two ledgers. That means the data is duplicated and is there. But financial entry is only one, ledgers are two. These are real transactions. And these are real line items. which goes in final reporting. Okay, these are real, both. Okay, these are not that the hypothetical. These are real, each ledger. But we will be posting. We just post one entry normally, and it will update all the ledgers. Okay. If you want, I can show you here. I was showing you, but my system got disconnected.
So, and then which would be the posting, like FI entry posting? Let's say if it is IFRS, then that's the posting it should go into your books, right?
IFRS is mainly for the IFRS reporting, IFRS compliance, but you have a local compliance as well, right? Local.
Yeah. So local is what you would report. For example, if it's okay. So your reporting is very completely different. What goes into FI posting is different from. I mean, isn't it one of this posting revenue that is going into the reports? Basically, how you recognize, right? That's what you want to show in the books as well, right?
Yes, what we
It
want
could
to
be. I mean, it could be IFRS. It could be GAAP. I mean, in US, it could be GAAP. So out of these two, leading and non-leading, which would actually go into the books as FI entry? FI actually
both.
FI posting.
Both. Yes.
And
both you have to report, because IFRS is for international compliance. That's a compliance.
Okay.
It's a mandatory. And
Okay.
locally, wherever you study, in US or India, we have a local accounting standards, local accounting boards, local regulations.
Okay.
As per India GAAP, as per US GAAP, there also you have to report. That's a mandatory. Both you should comply, both you should report, both are real.
Okay, but when you report, you won't consider both the ledgers. You will consider only one of the two ledgers.
IFRS depends. Generally, if I give you how they define, so US companies, they use IFRS as a non-leading ledger and their GAAP as a leading ledger.
Okay.
How you configure? I've seen like that, both US companies and I've seen European companies. Leading ledger means for them IFRS. They are mostly IFRS compliant. If there are any local gaps, that also they use as a non-leading ledger. So, it can be both.
So basically, leading ledger is what will go into your books that's reporting. I mean, if it is a US company, right? I mean, which is in this case is GAAP.
Yes.
So you decide what is going to be a leading ledger based on what you want to report.
Yes. What you want to report is based on how you define this ledger and the accounting principles set up in the FI. This is not decided in the RAR. This is decided in the financial accounting. Okay. I'm just showing you for your knowledge. This is like a base for revenue as well. So how you define these ledgers and how you define these ledgers and link it to the company code accounting principle. That's how our postings also impact in our final reporting. Okay. So if you leading ledger and the principal, non-leading ledger and accounting principle, that drives everything. Here it's a dummy system, not much is there. Leading, non-leading. Okay. Anyway, this is what drives is based on what is the you configure it. That's simple.
Okay.
Okay. And real. All ledgers are real.
Okay. So as a RAR consultant, are we expected to configure this, or this is primarily something that a genuine FICO consultant would be doing?
These settings are done by the FI consultant. Okay, so based on inputs from the business users, this role you don't have any control over thing, but we borrow this when you configure this in the RAR. When we come to the configuration, I will show you. Okay. So yeah, but here this one we are not deciding which accounting principle should go to the which ledger, which gap. Okay. That's everything decided by them. But when it comes to RAR, yes, we have to simple, straightforward configuration we have that will do it. Which accounting principle is required from IFRS?
Okay. So we this screen that we see is not something which we with the configuring.
No. Only for understanding, because
Okay. Yeah.
talk about IFRS 15 when you set the tone and standard. Okay, RAR is only for IFRS 15. Yes, 90% they use finally, but we can also bring in the other ledgers into the RAR. That's what to tell that, explain that point. I have to elaborate it to this level.
Okay.
Any revenue you can bring it to the RAR.
Okay.
That's, as we said, this will go back and we'll stick to our point what we are saying. So here we are. IFRS 16 means, yes, it's finally IFRS. It's what the module itself is IFRS 15 compliant. You can also bring in the local ledgers as well, and if you how you want to enhance it, you can use it. Okay, that SAP doesn't stop you. It's not only for IFRS, it's not for other accounting principles. But let's stick to the IFRS for learning, and just keep in the back of your mind that you can also bring in about the other accounting principles. Okay, so just okay. That's what I want to say. But okay, so what is IFRS 15? What we do the setting when we do testing, when we learn the concepts, everything is around IFRS 15. Whether local gaps have that one, that's up to wherever you are, whichever project you are working. So what we going to learn is everything based on IFRS 15. So it's based on the 5-level framework. According to this model, company first, what is it 5-level framework? We see each one of that framework, each level. So according to this model, a company must record revenues in amount for which consideration is expected. That means there should be some revenue when you enter into a contract with customer. It's not anything charitable trust or anything. It's a real business. That's what they say. With customer, and customer is willing to take your service or your product, and he will be paying you in a consideration. That's the base. Okay. It's like you are selling the goods and services, customer is buying it. That's the basic. And that you show this as a revenue in your financial statements. This is the basic they are setting. And so this is like whatever company you set up, whatever business you are doing, you are selling goods and service customer, and then regularly you do that one, and you expect customer will pay revenue to you, will pay money to you in the form of consideration. That's the first point. Those are the transactions you will bring it are in scope of the IFRS. Okay, so it sounds like okay, everything we do is revenue. No, for example, you parked some money in the bank, you have excess money, and you wanted to earn some interest. That's not part of the IFRS 15, because you are not your business is not investing in the bank and earning interest. Your business is selling your goods and services to customer. That's why this standard defines the scope, what type of revenue is part of this IFRS 15. Okay, so do not bring okay, I'm selling some, I got some excess money, I'm doing some earning some passive income for the company, and that IFRS 15, no, they are governed by other standards. This is what I want to highlight about a part of this point. Okay. So let's see that each step and understand. Then only whatever we do in the later it will help. 5-step model. So 5-step model means from 2018 onwards, all business transactions in this 5-step model can only be reported under IFRS. So what is that 5-step model? So what IFRS contains is regular transactions like buying and selling goods and services in a standard. So what it doesn't cover is leasing. The leasing is not buying and selling. Okay, leasing contract is leasing your whatever you have. That's for the sum revenue that is covered by separate standard. That's why it's not part of it. So the goal is to put unique revenue. So first is the 5-step thing, identification of the customer contracts. This is the first. And then under the contract, what POBs are there? That means what you are selling, each item, phone, charger, that pack, data pack, what you are selling in that contract is nothing but the obligations, performance obligations. And then when you have the contract, when you have the POB, it should have some price. Each of the items what you sell should have. That's called as a determination of the contractual price. There should be price for the every item you are selling to customer. And allocation. Finally, you allocate it. You have a price and you have to allocate it. That's the each performance obligation. Once you allocate the item, then you have to recognize. This is what it says. So clear? Yeah.
Shika, so in the first step, the determination of contract price is same as the selling price, or
No, they are not same.
Okay.
They can be same, they can be different.
Okay.
Both are possible. There are cases I will explain you when you come to this point.
Okay.
Your question is, okay, whatever we have the price for the POB is the same we allocated. Yes, it is the same. It's the same. If you sell it as a part of bundle, like everything, data, phone, charger, upgrade, every software upgrade, everything you're selling in a one item, you will have the one price, right? But you have different items you are selling. So you are selling it for one price, but different, each one of it has a different price within your system. In that case, we have to allocate it. That's where the concept of allocation comes. For example, you are selling data separately, phone separately, charger separately, everything. Then you whatever is the transaction price of that each item, you allocate the same. Answer to the question is it will be same, it can be different.
Okay.
Okay. And this is one of the important points as we come to this point in a breakup session, I will explain. Okay. So both is possible. Always keep open. Most of them will confuse, right? When they're learning IFRS, they think, oh, okay, we have to allocate based on SSP. But every case you don't have to allocate it based on SAP, SSP. Okay, standalone selling price. We will learn about this. Okay. And then you recognize. When you have to recognize, there is always a rule, IFRS standard says when you fulfill. So it's not that you enter into contract, customer paid the money by a bank transfer and you recognize. No, that's not that one. So as per standard, to fulfill. Fulfill means if you are providing service, you have to complete that service. If you are providing goods and service, you have to deliver it, and then customer should acknowledge, yeah, I got it in a normal business course. Then only you can recognize. Okay, so you have to remember this one. Clear? Sai and Nitin. Let's go each one of it. Each one. Okay, so identification of contracts. So identify the contract within the system. So if you as a functional consultant, you go, then you don't know what to do identification of contracts. You don't have to worry. We have some product owners, they explain us, but we have to understand and ask them the reverse questions. What do you mean operational contracts? You cannot say that I have some bank interest, you bring it to IFRS. No. Contracts means normal business of selling goods and service to customer and their customer is accepting it. It's a regular business. Those are the items that are we should IFRS 15 is applicable. This is step one. And same, rest all follows. We should know what is that one. Then we should know what is it you are buying and selling. Then what is the price, what do you allocate, and when you have to recognize. So this is important to understand. When you have this, others will follow.
So when you say allocate, it is like distributing, right, based on the POVs, like
Yes.
the price. You're kind of based on ratio or something. You're kind of allocating it to the different
Yes.
components.
Yes. We allocate it based on the ratio. Is called as SSP. I have further slides. I can explain that. Okay, so we have to allocate it. Why you have to allocate it, that also I will tell you. Yeah, this is like one picture. So for step number 1 is identifying. There's a standard definition. This is a IFRS standard. It says entity shall account for contract with customers. So remember, there should be a customer in the contract. So it's not that without a customer you bring it. What do you mean by that? So you have one entity, the group of entities. Within entity, you have your own sister company. You are selling something, some transaction, some goods to your sister company. Okay, that is not a customer, right? Your own entity within your own thing. So that's not a customer. Means it should be. We expect it should be some third-party customer where they are using your product and you make a revenue by selling to the customer. That's the definition. Okay, so there should be a real contract. There should be customer. Remember, always there should be contract. Contract means not that you should write it. It can be in writing. It can be in the oral. What's normally practiced in the business. Within scope. So the parties to the contract have approved in writing, orally, or according to customer business practices and committed to perform. Entity can identify each party's right. That means the contract should have what is that they are going to sell. Data pack, charger, whatever it is. There should be rights regarding the goods or services. That means once you enter into contract, you will mention everything. Okay, entity can identify the payment terms. There should be payment terms. It's very important. It means that when customer is going to make a payment to the company, that also should be mentioned. Contract as a commercial. It should be commercial, not charity or donations or other specific cases. No. It's just commercial transactions, your operations, your revenue. It is probably entity will collect the consideration. Yes. That means you are selling goods and services only to collect the money from them. That's a business. Okay, simple. You should keep this in your mind. So when as a functional consultant, when you go, yes, how it is applicable. It's applicable. If you should know. Sometimes right we clients, they may not be knowing IFRS 15. You should explain them that this is what it is. If they know, well. If they don't know, it's our responsibility to explain what you should consider as a part of IFRS 15. You cannot bring in whatever is there in that one. Not everything is applicable for IFRS 15. 90% of their revenue is applicable. There should be 10%. They don't have to comply with IFRS 15. That also we should know. This will give you, okay. This is like a consulting service to the customers. Okay? Not that, okay, we always do configuration and deliver it. No. So we should see that, this, whatever you bring into IFRS 15 should under this scope, this standard. So when we say this collection consideration, that means we sell them only to collect the money. So how do they know? So we should tell them that, okay, if you are dealing with customer, they are not paying any consideration to you, then better you don't bring it. IFRS is not applicable. So you are selling some goods to a sister concern. So, and they are not really paying you back in anything. Those are like intercompany transactions. Most probably intercompany transactions or sister concern transactions are not part of this IFRS 15. I want to explain you that point. Okay. Okay, this is the standard, and when it comes to SAP, So identify the contract. Entity has to identify contract with customers. Operational. So contracts here means if you are using SD, all this whatever sales order is applicable IFRS 15. So whatever SD orders you create, they become operational contract in RER. Whatever BRIM orders, BRIM provider contracts you are getting, that becomes part of the operational. That is nothing but the operational contract. SD orders or BRIM provider orders are the one where you actually provide goods and services to customer. That is nothing but your operational contracts in RER. So, and what are the feature in SAP? If there are any multiple sales orders like this or provider order, operational contract, I will use the term sales order is also operational contract, provider order, and the BRIM side is also operational. You can this operational accounting. If we have one or more and they are part of the one revenue accounting contract, we can combine it. This is one of the features. Okay. If you want to split this item one into separate contract, that also is split. So why we have to combine, why we have to split, that when we go to next steps, we will understand. Now you remember that these are the features. So yes. So yeah.
So the contracts, right? SD contract, let's say SD contracts. Is there any? Do we define any roles to identify the contracts which should flow into RI from there? Like, for example, we could create multiple contracts. Some may not qualify for as an operation contract, right? So which is in scope of RIR. So,
yeah.
So is do we define any rules? Do we look at something which identifies that this is this is probably an RIR scope contract?
Yes. So what should come into RIR is we will define that order types in integration in the configuration. Only that operational contract will flow to RIR, not everything. That's what you are asking, right?
Sorry, I didn't catch that. Ishika, can you repeat?
So, for example, what should be part of the RIR is defined by your business users. For example, you have in SD, you are creating, you have defined, say, 10 types of order types in SD, each one of it for each different business purpose, and say only 5 have this contracts with customers, only 5. Maybe other 2 or 3 remain to the scrap selling or return orders or something.
Right.
So in that case, those are not applicable to the RIR. What is generally have a contract with customer where we give the invoice to the customer. Remember, we give invoice to the customer, we collect that payments. Only those comes under RIR. Only those are configured in the RIR.
So how do you filter, like, what the criteria that you use to filter out these scrap contracts and other contracts that you mentioned, which are not in scope? Is it at the order type or is it at the
order type? We have a configuration here. So let me show you that. Here you can see. See here we define here which sales organization, which order type, which item category under that relevant to RER or not. Because in the same order type, which item category. So item category is a defining factor. What is relevant? This is how we filter out.
Okay. So here basically what you see is an order. So even an order can be can be an operational contract is what you're trying to say then.
Yes.
Not necessarily a customer. It's not that actual SD contracts that only not that, just that actual SD control that gets scoped in. A normal sales order can also be an operational contract from an RAR.
Yes.
Standpoint is what I understand from this.
Normal sales order or nothing but the operational contract in a RAR. Okay. Normal, because we never said that contract should be a contract created. Contract is like a oral.
Right.
In that case, some companies, they don't use any quotation, any contract. Directly they create sales orders. That is nothing but operational contract in RAR. Okay. So clear? Sai, anything?
Yeah, that's clear. Thanks.
You can ask me any question. Okay. So this is how we can filter. So which sales orders or provider contracts are nothing but operational contract. What if your client is not using SD orders? They're using third party. If they're using any third party, so they have to create this operational contract within RAR and directly post it. We don't have the SD orders. Directly from any application, you can bring the items into RAR. Okay, so don't assume that it's only we have a sales order and we just start getting. That's not the thing. Okay, so these are the basics. You should always, there should be in IFRS view, IFRS world, there should be contract, but not necessarily there should be a real contract in ASD. No, SD orders are as good as operational contracts. Provider order from the BRIM is as good as this one. Or third party, you're creating anything, you can bring that items into area, that's as good as this one. Okay, so operation is operational data, operational contracts. So once you have this contract, now let's go to next step, performance obligations. Means that what the scope of the contract is called performance obligation. Okay, what items you are selling it to customers? Simple. So what is that you are going to sell it to customers? Okay, and okay, that's called as the performance obligations. And because revenue has to be recognized for each performance obligation, and revenue is allocated for each person POB. Okay, I have picture I can show you. So SSP, what we call it as a this will explain a separate concept. So identify the what is that goods and services you are selling to customers. Simple. And based on that, each item we will allocate the standalone selling price. So I will explain you again in next slide what is SSP. Okay, so the POB means each item what you customer is buying, whether goods or service. That's called as a POB. And when you create a POB, when you say this is my performance obligation, you recognize revenue. And as per IFRS, it should be distinct. Distinct means you are buying, you are selling cell phone, that's a distinct. You are selling the chargers, yes, on their own, there is a distinct. Customer can only buy charger from you. Customer can buy phone and charger. Customer can buy data. Customer can buy laptop bags. Okay, along with that one. It's our phone cases. There can be separate use. Okay, it should be distinct. That means you should be able to sell that item separately. That's called as a distinct. Remember, these distinct and non-distinct. Distinct means separately you can sell that item, or combine that item you can sell this one. So distinct means customer should be able to buy your service or product and able to use that one. That's called distinct. I'll take an example next slide.
So we are saying that distinct items are what gets qualified as POB.
Yes, only distinct items are qualified as a POB. For example, you are selling something as an upgrade to the phone. You cannot sell only upgrade, right?
Yeah.
There you should have sold the phone, and later you are selling upgrade for some money or something. You cannot create a POB as an upgrade, because you cannot sell anything as a distinct item. In that case, okay, we should see for what is the distinct for that, and the non-distinct item should be added to the distinct. So as a first, you should know what is the distinct. Distinct means on their own, customer should be able to use it. Okay, Sai or Nitin, on their own. Phone on their own they can use. Charger, yes, you should be able to sell it separately and customer can buy it. Maybe they can use for some other phone. How you sell that? You should be able to sell that separately. Okay, so that's called as a distinct. Because if you say distinct, there is also a non-distinct. Items which you cannot sell separately, like upgrade, you cannot sell separately. Okay, so that's called a non-distinct. Whatever you can sell a distinct item, that is called the POP. That will only get the revenue. Simple. Okay. So remember this very important term, distinct. Not clear? I'll go to the next slide to explain in detail. So entity has to identify the performance obligation contract. Performance obligation is the level where standalone selling price is defined. It means that we should be able to sell that in the contract. You should be able to sell each item separately, and each item should have the separate selling price. So it's like this. Okay, let me explain you. Contract 1. In the contract, you are selling what? Phone, data. Okay, this is what, same item 1, item 2. So each one of the item, so what IFRS says, there should be contract, yes, there is a contract, and there should be performance obligation. This is IFRS 20. Okay, you have phone and data. Okay, so it is. And each item, okay, so should have the price. So price, the contract, and catalog price. You know this catalog price? It's nothing but SSP. Any company you go, they will tell that, okay, price for you is so you do, maybe they are selling it for the $1, something like this. This is for the price for the contract level. What if it is general price what they have in their company? Okay, so every company they have some catalog price or list price or yes, that's called as a standalone. If you sell only phone separately, what is the price? It will be 120. So everything in your system, you should have this SSP. Okay, so irrespective whether customer negotiates and maybe he is getting at this price, negotiated price per. I think I'm confusing you all. Let me remove this. There are only 2 here. Okay. Customer negotiated and they got phone for $1 and $150 for data, which they will pay it for 12 months. Okay, this is fine, whatever you negotiated, but what is that they have in their SSP? That means company should know that one, that okay, if you sell separately the phone to any other customer, they sell it at 120, data some $30. So this is called as standalone. This is standing on its own. Separate price by its own is called standing. This is not linked to this. Since customer is buying both phone and data, they negotiated and they got at this price.
And phone can be zero priced as well, right?
Yeah, it can be 0 as well. But
But
normally
then the key is to get have 2 line items in the order, right? Let's say if it is a standard order, what you're saying is like you need to have 2 line items. So only if you have line items that get recognized as POVs, potential POVs, right?
You can be having one as an item, but you should be able to sell that item. Customer should be able to use that item on its own. So if you're selling phone, yes, maybe they'll go to some other operator, they can use the data. But it's not necessarily the 2 items, it can be 1 item as well. So I'm giving you that normally 1 item can be there, 2 items can be there. So to explain where IFRS is really impact, I'm explaining this.
Okay. Yeah.
1 item also they can sell. Don't ever think that, okay.
Yeah.
This contract to customer, I said, no, I don't want your thing. So they negotiated, probably customer would have got it same because they are not buying data, right? That's why you are selling it at your standalone price, catalog price, list price. If customers enters into contract with data and they are buying data, they will get phone for some nominal amount because they cover this phone amount in other. So that's where we need to, in these cases, we need to know what is SSP. In these cases, we also need SSP, but here price of the contract, price is same. So POB, what's the POB price here?
So Ashika, so when we have one line item, then it will be under the grouping, it will be standalone or a customer grouping.
Yeah, can you say that again?
So we'll have the grouping, right? So standalone and customer grouping.
Yeah.
Yeah. So when there is only one line item, it will be standalone or still it can be in customer grouping.
It can be customer grouping as well because maybe he negotiated for the 100 phones, you would have got it only at $100.
Okay.
And the quantity can be this thing. But standalone selling price is like irrespective of the customer, we have one price for that product in your company.
So we could also have a case where I'm buying, I'm taking a new connection, phone connection, mobile connection, and then I'm getting phone for free. So
yeah, those are the cases where we need a SSP. Okay, so this definition.
And then it will, in that case, we can still manage it with one line item wherein we are saying like, this is okay. This is a phone with service, phone with data, connection or something. That's basically or we should ideally have 2 line items.
Yes, can be 2 or it can minimum there will be 2, as you said. What is it? It can be even more than that. Like one-time installation charges will be there, and yeah, or some one-time some internet. Minimum there will be 2. It can be more than 2 as well.
So minimum there has to be 2. That's what you're trying to say. Like phone. I mean, there has to be 2 distinguishable line items in the order. It can be zero price, it can be whatever, but there has to be 2 line items, which shows the phone and other which shows the service, which is the mobile connection, right?
This is to qualify. Actually, let's clear first one. When you were selling anything to customer, you can sell even one item. Okay, let's be clear. You can sell either phone or you can sell even the only data.
Yeah. Correct.
Okay, so only data. So not necessary that you should always sell this one, contract number 3. You can have any contract with customer. Only data you are selling, you can sell data. And you can selling only phone, you sell only phone. If you are selling both phone and data and other services in one contract as a negotiated price, and that negotiated price is different from the selling price, that's where IFRS principle says that you should allocate it based on the SSP. We are not yet into the third step. We are still in the second step. So answer to your question is you can sell even the one item that should be a distinct POB. We are in the step number 2, right? So item number 2, POP. So it should be distinct POP. Distinct means phone on their own, they should be able to use it. Data on their own, they should be able to sell it and use it. This should be a distinct. Can you sell the data only to the customer? If yes, that's a distinct. If you cannot sell the data, then this is the non-distinct.
Okay.
That's the simple. We are in second step. If you cannot sell only data bank, then it is non-distinct.
Okay. So basically, the POB line item should exist as line item, order line items, right? Or contract line items.
Yes, they are order line items.
Okay. So yeah, I mean, without order line, if it is not a line item, then it won't be a POB. So whatever you define as POB should exist as an order item is what I understood.
Yes, as a distinct POB, they should exist.
Okay.
And there are some cases, okay, if there are no items in the sales order, you want to add directly that item in RAR, you can add that non-distinct, you can add that items in RAR, but that's some remote cases, that's possible, okay. So, but normally what is there in the sales order, that will, each item is nothing but your one POP. Okay, that should be a distinct item. I know it will take some time for you to sink in, but still okay. You have some doubts, again, we can repeat this. So remember, if you don't understand this, whatever we talk next, you will not understand. First, there should be contract. You should be able to sell that separate item. Okay, that's everything is default distinct items. So okay, so and if you cannot sell this item separately, and that's called as a non-distinct. Non-distinct will not have any amount. Only distinct will carry the revenue. All your IFRS revenue recognition is based on only distinct POBs. Okay, clear? Sai, anything?
Yeah, and you mentioned sometimes edge cases you add it directly in RAR. So
Yes.
even for SAP S4 flows, you can do it directly in RAR.
Yeah, you can do it, but I have not seen any company using that.
Okay, and then you define it like this line item 1 should be recognized as 2 POBs. Is that how we do it? Theoretically, in theory, if we have to do that, how I mean.
So you're asking in what cases we apply adding POBs directly? Maybe every order, whatever every sales order they create, they have something like installation charges default $100. Assume that one $50. They can add directly, which they doesn't change contract by contract. If contract by contract or order by order it's changing, then RAR cannot have that data, right? So it becomes wrong. In those some remote cases they use that, but option is giving. Maybe some clients customer might be using, but I have not come across. So,
okay. So, but is that something we can simulate, Yashika, just to understand, like one item can, or is it very complicated to do that?
No. We already have that configuration. I can show you, like whenever you bring in this distinct, non-distinct can also be added. If you bring in this $100, non-distinct are $50, non-distinct cannot carry any revenue. Non-distinct is added to the distinct. So default that also simulate.
So it becomes it appears as 2 RA items, is it in RAR?
Yeah, it appears that like this. Okay, let me show you. Assume that one, this is a non-distinct. How it appears is you cannot sell data separately. In RAR, it appears something like this. Price of the contract, amount in RAR, POB amount, right? So we will show this. So 1 plus fee, 150. 150 plus 1. Only non-distinct amount will be 0. 0. It will show as a separate line 0 amount. And since it's non-distinct, we should not recognize the revenue for the non-distinct. We should recognize only the corresponding distinct item. So here distinct item is 150 plus 1, 156. That means you should add it to the distinct item. Simple.
Okay. So
What it
it's
means?
going to be one. It's going to be one line item, right? So you mentioned something like installation charges, right? So by default, what happens is like it will be added to that distinct line item which is flowing into RAR. It's not going to exist as a different POB item.
Yeah, it can be both cases. How business bring in. Sometimes they add it as item number 3 as an installation, or sorry, as a okay. So item 3, one off or installation.
Okay.
So installation, so you cannot sell installation, right? Because if you can sell these 2 items, only then you can sell. So it is like, so this POB we configure that as a non-distinct item, and this will create a non-distinct item, something like this. Okay, and but this amount is it cannot be so much. Okay, take it. This is a distinct. Okay. And in this case, this will get a 150. So this will have the $1. This will have the 150, and this is 25. You cannot say you cannot recognize revenue for the non-distinct items. So you recognize only for the distinct. So this will we have to link this non-distinct to the distinct. Only then to which POB you link it. That's technically we should do the configuration. Assume that your non-distinct is linked to the phone, then you should show this plus 25, which is nothing but the $26. So it's like this. Okay, so IFRS definition says recognize revenue for the distinct POBs. Whatever is non-distinct, identify its corresponding distinct, add a revenue to. Automatically SAP will take care.
So for one-off, is there any dependency on other line items, or
Yeah, dependency means if you can sell the phone, only then you can do installation. No, that's called is the dependency.
so is there any other examples that one-off can be?
So other than installation is one-time charges. What is that? Can be, it can be. What I know in telecom industry is less, but if you take high-tech industries, I'll give some other example in the high-tech industries. So you are installing product for customer use. Subscription product. So
Yeah.
okay, you are installing your printers. Most of the printers in office are there. Okay, so location 1. So here we have what SUBS, subscription product. Customer will pay as use. Now what is amount? I will not say any amount. What is? Okay, so per print, quantity will be, what is the amount? Here we need to know what is this. Is subscription product itself is like a, I'm giving you an example. Okay, you need to come out of this example. So we have say 100. Okay, so now we have a installation one-off. one-off is 25. So this is amount you cannot allocate it. You have to show this as a 100 plus 25. It is like a 125. Okay. So location 1 you have installed here. This one. So what if they move from location 1 to location? Okay.
But for one-off, there can be amount, right?
Yeah, it's like what is one-off is what you don't regularly every month you charge it to the customer. That's called one-off. So if
Okay,
you're
we're charging. Oh, okay. If we charge every month, that can be one-off.
if you don't charge anything regularly and you
Oh,
charge
if we
based
don't,
on
okay.
the service which customer uses. So that's called as a one-off charger. That means why we use one-off, right? To remember, SAP also one-off means you remember this IFRS 15 became very complicated for the high-tech and the telecom industries. Okay, high-tech telecom, these are impacted. So one-off means in that cases, telecom industry and the high-tech industry, subscription products, right? What Amazon, Netflix, every month they charge it, right? So what you regularly, customer takes a 1-year contract, 12 months, regularly we keep charging them some amount and we sell the device. And any service you give them once in a while, at time of buying or at time of moving your location, like printer one location to other, or taking some adopt services, those are like one. That means that is applicable when it is occurred. Okay, so that's called is one time. They regularly we don't charge the customer. It's only inception of the contract we charge. That's it.
Ishika, what I was trying to ask is, yeah, I mean, let's say you have item 1 and 2 in which is phone and data, and then one-off installation which doesn't exist as a line item 3 in the contract, operational contract. Let's say SAP order item 10 and 20, which is phone and data. Can we create a POB for installation or whatever, like, which doesn't exist in the order? Like, we can define a rule where, we know that it's a fixed POB or something, Can we
Yes.
create something like that?
Yeah, we have option called as the POB add. That's what I'm saying. The
Okay.
POB add configuration in BRF Plus, we can define. We're saying that every phone default add one installation. Default. We don't exist here. Okay, this is not there in the operational order.
Okay, and that's something we can simulate when we get into the system, right?
Yes, we can simulate that. Clear?
Okay. Yeah.
Within Sai.
Yeah.
It is like, I know it's confusing, but repeat it. For me also it took a lot of time to understand. So it will take its own time. So do not worry. Remember these terms very well. Distinct only we can recognize revenue. IFRS dependent different. Non-distinct means which customer we cannot sell it. Those are non-distinct. Okay. We are going back to our principle of non-distinct here. So there are two more steps. We'll complete that and we'll close for today. Okay. Otherwise, it will be like in the middle. So what IFRS is performance evaluation, it should be distinct. Each one of it you should be able to sell it, and each one of it should have the price, and each one of it should also have the standalone selling price. That means you should be able to sell to the different customers different prices. There should be some common price in your company. Maybe you negotiate with your customer different prices. That's not what IFRS is saying. There should be a distinct POB. You should be able to sell it. That's it. You see, if customer can benefit. Okay, first, okay, let's to identify. You should identify it. Okay, and then each item should have the standalone selling price. Each item should be able to sell it at some price. Okay, that's the only the thing. They should have the SSP. a very common price. Okay, and where price is allocated for the each, and customer should be able to benefit from the all the items of the bill of material. Okay, this is more like a SD. You remember in SD, customer orders 5-6 items. All items are separately distinct. It's good. All items are not at all separate, distinct. If customer thing, then it's called as a non-distinct item. Simple again concept. Customer should be able to benefit from the separate items. If you are selling only data pack, you already have a phone. You can benefit, right, from that example? Yes or no? You already have a phone with you. You just go and buy a smartphone pack. Yes, you can sell this, customer can benefit. It pass. And you have already a SIM card, it's working, data, everything is there. The only thing is that probably smartphone got damaged. You are buying only smartphone. So, and customer, we as a company, we can sell separately only smartphone and use that SIM card in this and use it. Separately, yes. This is called as a distinct POBs. You see the benefit they can get, and then the customer should be able to sell it, and there is a price for it, and that's why it is called as a distinct POB.
So, here POBs are like smartphone and battery charger, or three are POBs.
Yeah, you have a smartphone, but the charger somehow got wire got broken, and you order, you buy only the charger. That means we as a company, I am going to sell only the charger to you, and you are going to benefit out of it. Then it's a distinct.
Okay. So will that qualify as a RAR case?
Yes.
Because okay.
Yes. You can
I
create.
mean, and let's say you have a warranty or something, right? I mean, you have these packages, right? So then, yeah, it becomes. Right.
Whether we have warranty or not, it's at the beginning itself this get decided.
Okay.
Whether it's a separate POB or not separate POB, we can say account. When you
Okay.
sell that, yeah, when you in telecom industry, most probably yes, data and device and data. And you have some other accessories, you sell it, any one time you sell it, you have to see that whether it qualifies as a distinct POB or not. Okay. We don't decide, we have to understand this. Business users are there to decide. That's their, whichever business client you are going, they know it. And but we should say that, distinct POBs are under this IFRS 15. Okay. We should understand this very important point. What if everything is one, and if you cannot benefit, customer cannot, so they cannot take only pack, and because they don't have the phone. If we have any case where on their own they cannot benefit, that means customer buys the pack, they don't have the phone. So in that case, they can't use it. So in that case, so for us, what customer does is not important. How we are selling it, we have to recognize revenue. So if you cannot sell the separately pack, you only sell smartphone together with the pack, and you never sell any data pack separately. Okay, only with smartphone you sell the pack. Then these two together is called as a one POB. That's what IFRS says. Business examples can be anything. Okay, so if you can sell separately and customer can benefit, then it's called as a distinct POB. Each item will have the revenue, each separately to recognize it. If you cannot sell this item separately, then together we have to sell this as a one item. We have to show this as a one item. Okay, this is the distinct between, this is the difference between distinct and non-distinct. If it is distinct, each item you can sell separately. Each item should have the revenue and recognize that. If you cannot, then all these three you put together in a one POB and recognize the revenue. That's it. Separately or one, that depends on the business case. Clear? Don't. This is one example. You can take n number of examples. So, any questions in this one? What is qualifies as a POB? No?
Nothing kind of clear.
Yeah, it's a business case to case. You just see step yourself what you are selling it to customer. If you are not if you're selling everything as a one pack item, you are not selling separately, then that one pack item is called one POB. If you are selling, you can sell that separately as well as together, then SAP says that, IFRS says that no, you have to recognize each one it is separately. Maybe for one big customer you sold it as a packet, but generally for all customer how you sell. So Nitin is there, Sai is there. I'm buying entire pack. Maybe Nitin buys only pack. Maybe Sai buys only smartphone. If you are able to sell differently to different customer, then each item is called as a POB. So IFR is more interested in recognized revenue POB level. Okay. First you know this now POB. Next step is there should be price for the transaction. There should be price for the POB, right? Each one of it should have the price. What price is? Price here represents what is the price you are selling to customer. And what is it you're expecting out of it? This is purely what customer is going to pay for you. Purpose of determining transaction entity shall assume goods and services by transaction the promised recorded. These are definitions. You have in SD, right, all the pricing conditions. What is that you charge to customer pay? That is called the revenue for us. Okay. There is a price. PR00 is a condition. That's a price. We bill it to the customer. That's what we are going to get it via cash payments or bank payments. That is called your transaction price. Your standalone, this is not your revenue. This is like your catalog price. You are saying that, I can sell this at this price. This is like a base price for you, what you keep it. But what is the price you are selling to customer is nothing but a transaction. This is what will be there on your invoice. This is what your transaction price. Transaction price is your exactly the final revenue. Okay, clear? What is transaction price? What goes into the invoice? What you bill it to the customer? What you negotiate with that customer, that price is called the TP. Clear? This transaction price. In sales order, whatever amount is there, that's called as a TP. Pricing conditions. Anyway, allocation of transactions. So once you have the TP, you have to allocate it. Why we have to allocate? So allocation, so revenue is recognized based on the allocation amount. What you allocate to the POB, that will be your revenue. So we have two examples. I can take a case. One is, I will go back here. You have two items here. You are selling two items. One is this price, and you are giving.
Transaction price is defined by SSP, the condition type SSP, is it?
We have a separate condition type SSP that will give us the SSP prices.
That is the transaction price, right?
No. This is standalone. So, for example, Sai and three of us will go to store, okay, and separate days. I negotiate with them for $1 and $150. Okay. Sai goes for $2 and $300, and I go with different price. So that is what is called transaction price. Standalone means
the actual price.
it's like if you sell only the phone to the customer, what is the catalog price, the list price? It's like a listed on their store, but it can be same, it can be different. Depends.
Yeah,
What is
simply like MRP, right? SSP is simply like
MRP is simple. In India, it's called MRP,
MRP.
and but other countries it's called different terms.
Yeah.
What is that
Yeah.
you're selling? Yeah, separately when you sell it, what's the price? MRP is the best example if you are in Indian context. MRP will not change, but every customer they will get it at different prices. Okay, that's called as a transaction price. SSP is like a standard price for every product. You know why this concept has come in? For example, the say a company they're selling to Nitin, Sai, and me 3 different contracts and revenue. So and heavily negotiated, right? So if the contract one is $1 and I got only the 400, how you show the revenue? Okay, phone it shows 1, and for in the contract it shows 2. That's where IFRS says no. You sell it in the group, in the bundle, or separately. You should show increase the amount in the ratio of SSP and then show it. That's how contract 2 I got it $100. We also have to allocate it so that it becomes something like, okay, why SAP is RAR wants SSP is I got it 100. So total revenue sold by them 100 for like me customers only phone. But if they buy data, our revenue is very less in phone. IFRS says no, I don't accept this. You sell it in the as a pack, as a bundle, or you sell it separately. But while recognizing this one, you recognize as if you sold the phone only. So that's why this maybe it comes as a 75. That's why all the revenue you should report it on the device as if you actually sold the amount for the full amount. So earlier, right, before IFRS, they used to show the revenue like this, data and the pack like this, and only phone companies used to show like this. We don't know what's the revenue reported by the phone and data. The revenue is very less, and companies only selling phones revenue is different. You're not able to compare the phone to phone. So that's the reason this SSP everything has come into picture. So that's the objective. Objective is whatever you sell it to any customer, you should report as if you are selling it separately. Okay. So if you have one item, it's the same. If you're selling together, you cannot show this as a $1. There is a price. You are recovering it from the data. But this is your transaction price. But you have to allocate it based on the standalone selling price. And then so that amount will reflect the correct amount. Clear? That's where the SSP has come into picture. Otherwise, we don't need SSP. It's a standalone selling price. It is. That's it. That's where the definition. So unallocated. Let me explain you this one. So objective when allocating time is for the entity to allocate the transaction price to the performance obligations. Distinct goods in the amount depicts the amount of consideration to which entity expects in exchange for. Okay, this is the definition. So why? Because this is the telecom industry is mostly impacted. That's what I'm saying, high-tech industry. And if there's where they impacted the companies where they are selling bundles, they are the even most impacted. Okay, wherever they're selling 2 items, where one of the item nominal amount, one is more amount like this. This is where IFRS said, no, you cannot show the $1 because in the phone you cannot get it $1. We are not able to compare the phone sold by this telecom company with only the phone company. So they are not able to compare the quantity. That's why IFRS definition, this is where they are impacted. Okay, so if you are selling this data and impacts together in one contract, in that case we have to allocate it. Okay, so let me show you one example here. I'm just giving you the, with this we can close for today. $150. Everything is in dollars. Okay, I'll just remove it. I'll put it here. 150. SSP is 120, 130. 12 months, right? This is the 240. So now what IFRS says that you cannot recognize revenue for $1 because your revenue is here. You need to show the correct picture, correct revenue for the phone. So what we do is, this is a distinct POV. I'll keep this. Okay, so now you have to allocate it. Allocate, how we allocate this? This is like 150, this is like 241. It's like total TP. Price of the contract is nothing but TP. What? This is what customer pays. Customer will not pay this. Okay, let me take you this first. Specify that thing. This will be easy. Okay. Usually SSPs are very high in net, but you are selling it for $1. This is the customer pays. This is our SSP. How we allocate it? You cannot show that my POB of the iPhone is a $1. You have to show this is 240. This is okay. Let's 240 we'll allocate in this ratio. Divided by 530 into 241. 227. 30 divided by 530 into 241. Okay, so this amount we are allocating in this ratio. I think let me do this. This is better. So this allocation is something SAP does automatically. So, but we need to understand this, what IFRS principle says. So you never don't show this $1. You should always report as a 227. That's how you will be able to compare the whatever phone you are selling it with the separate contracts, and similarly separate companies as well. Your company performance, stakeholders should be able to understand how you are performing with other companies, right? So otherwise, if you always show this as a dummy amount, we cannot compare with the other companies. Maybe they are selling it for the $2, maybe some one cent. So to help in equal reporting in along with other companies, they brought this rule. Clear why is IFRS 15 came into this? Earlier they were reporting like this, I've seen this one. Just whatever they entered into customer, they were reporting like this. $1 or sometimes point some cents. They used to hardly show anything on the device. Now we say you cannot show that one. You have to show this. Clear? This is what it is. What if you sold only one here? Catalog price is one. Whatever you are selling is your POB, because there is no other amount. You are selling it only one item, and this is only one item. Okay, so there's one more example I can take. Okay, what is amount? You are selling this for 500 and this 30. Your allocation amount is also the same, because it's same. Okay. Okay, clear this one? Why we should not recognize as it is there in the operational contract? Why we have to allocate it? Because to compare the reports standard in the market. This is called the entire example. No? Nitin Sai. I think this is the last one. So everything what we do tomorrow is like this only. Same thing we keep reusing this. Okay, once you allocate, what you should do, recognize the revenue. Okay, so recognize it when you hand over, and services is every month. Okay, so these are some fulfillment events are there. So when you actually deliver, customer accepts, and you can configure this in SAP and see what is your fulfillment. And once fulfillment event comes, you recognize it. Okay. I think I know it today to clear longer because I could not again carry over to the tomorrow. Tomorrow we will complete on time. This 5 is one subject. Yeah, I think we are done for today. Let me know any questions here.
So you define when to recognize the revenue. Is it like how? I mean, how would you give that signal to RAR from SD? I mean,
yeah, I'll tell you that one. In RAR, how it works is orders are created. So we also create revenue accounting items in RAR, but they are not recognized in one go. I had to explain you all these structure. I will be able to explain when we come to this other pictures. We have when we recognize when it's there in the future. I'm going to show you that one. Anyway, since you are asking me, I'm telling. We have something called as a when you create renting, we get as a order items. So here we allocate. Okay, we create RAR contract. What you seen today, 5-step principle. We create POB, distinct, non, what else? Okay, distinct leading, and then we don't recognize here. We just create and leave it. Okay, so when we recognize, okay, so one fulfillment happen. That means if your goods delivery, proof of delivery, acceptance event, it will bring fulfillment price, fulfillment items into RAR, and then we will recognize. Okay, this is the event. If it's time based, we are not delivering anything. No, time based. Time based, for example, you have a data pack every month. So every month at the end of the month, you can even do middle of the month. So monthly once we recognize that one. Yeah.
So let's say we have the contract created this month, but the start of the contract will be like maybe next month. So the recognition will happen next month, right? Not at the time of creation.
No, only when we start, that start date is important.
No.
Not when you sell it. Even though you sell it in October, but you're starting the services in November 1st, you recognize only November. Why? The 5-step principle, 5-step model, you have to understand.
Like, do we need to keep any flag, or the RAR will automatically wait for the start date?
It will automatically take care when based on the time start date. Because IFRS principle says when you have control is passed to the customer. You see this the last point I was showing you. When control is passed, or monthly over contract period after the start of services. So according to its principle, SAP RAR will not recognize it based on the start time automatically.
what is the use of this suspension flags, Ashika?
Suspension.
Yeah, suspension flags.
So that is to pause the revenue recognition.
I mean, like, can you, if possible, can you say any scenario like where we use suspension flags, or is that the topic that you're covering later?
We don't have the suspensions in our scope, but I can once you create the contracts, we can see that suspensions.
Oh,
It's like you are pausing the recognition because you think that that's not the correct, or it's breached your revenue, or you think that that's illegal transaction.
okay.
Yeah, so that's like you are not recognizing, you are pausing it, you are putting a pause. It's like you are holding you are suspending the revenue recognition. Suspension, right? You are talking. Suspending revenue recognition. It can be anything. Maybe it's invalid revenue. Maybe it's invalid revenue, or some other reason.
So this can be used like, let's say we have monthly payments, like monthly recognition. So if we didn't receive any payment from the customer for 1 month, then it will same thing will be applied like suspension flag, or is there any other that we use?
No, payments have no link to the SAP RAR. Payments are not part of it. Payments are outside SAP RAR.
Okay.
So if
if monthly recognition, let's say we have $30 for 12 months, right? So if we don't receive payment from the customer, so how RAR will react for this, because we are not receiving anything from the order level, right?
let me explain. That's a good question. So first of all, 5-step model says that when you initially sold goods and customers, you recognize revenue expecting that they are going to make payment to you, right? Expecting, or at least there should be a 50% probable. That's what standard said. Well, that they make payment. That's what we do business. But if you don't get it, then impairment of asset is there, where you can perform write-offs. So where you can write off assets and write off revenue. So it's called impairments. So you get to reverse it, no? So if they're not making payment, so what it means for you? But that's the revenue is revenue. If they're not making payment, that's called as a bad assets. What you do it, even if so you will create a bad debts, right? And create a bad debts and keep it for 3 years or so, and then after 3 years, write off. This is what I know what they do. But once you recognize revenue, you will not do anything. In the accounting itself, you have to take care. You have to writing off or something.
Is similar to change order in order level, or this is different? Like,
so revenue will not change here. So let me write down your accounts. When you sell goods and customer to, I have account determination. I'm taking it to later. But here revenue, you have accounts receivable, right? Accounts receivable. Accounts receivable is like your current asset. You both of you come from finance background?
no, I'm not.
SD.
SD. Nitin, you are from SD?
Yeah.
Sai, you?
I'm from business analyst, mostly Power BI.
Okay, no issue. So when you sell anything to a customer, right, you always create accounts receivable as a debit. This is called as a current asset. Okay, and credit revenue. Okay, so in RAR the accounting entries are different. So it's like this. So your revenue you are recognizing. Okay, revenue is recognized, but it's over. But you have here asset, right? How we are going to close this is nothing but accounts when you receive the bank. When you receive the bank or cash from customer, okay, so this is credit. Every debit should have a credit. So when you receive amount from the customer, we debit bank account. Debit is like our, when you get any cash, everything that's called as a debit. So all assets are debited. Okay, so you don't have to worry about this one. Just understand, you understand or not, but we are going to get revenue like this, and whatever asset is there, we are going to reverse it because it's no more receivable. AR. Okay, so but because we posted current asset, we are saying customer will make a payment to us, and when customer makes payment, your current asset is no more asset because we are going to reverse it. This is what happens. But if customer doesn't make a payment, right? This is where we take. So we'll wait and we will write off.
And also one more thing. So for RAR point of view, we are not going to touch any AP, right? Account payable. Only we are only dealing with accounts receivable, right?
AP only cost recognition is there. In that case, we touch that AP.
Okay.
This question is clear. If customer is making a payment, we will get the bank. Okay, so if customer is not making a payment, we just write off like this. So write off means it's like a loss to us, but you cannot reverse the revenue. It's over. You showed, but actually that's your revenue. Customer did not make a payment. That means it's your bank cash you didn't receive, but it's not that you didn't make any business. You made a business and showed the revenue. So we have to show that as a write-off. Clear?
I mean, when you don't get the payment,
Huh?
write-off is like, when you don't see the
Yes.
cash.
Yes.
Okay.
You're write-off.
So how write-off will appear in RAR? So is there any field in the reporting side or how it will?
I have not seen inside RAR any write-offs. I've seen these write-offs happen directly in accounting. So there is a separate standard for impairment of assets, but inside RAR I have not seen any write-offs. Outside RAR, when you move all these revenue, when you post FIGL entries, right, this will all be there. They will just manually
Real postings only we can see write-offs, right?
direct postings. No, in FI we have a write-off for transactions.
Okay.
We have separate transactions in FI write-off. You want to know how this is posted inside RAR, but inside RAR
Yes.
there is nothing. There's
Yeah.
no transaction says that it's you whatever you recognize, reverse it. No. You customer cancels the contract, then we reverse the revenue. But customer takes your goods and services. That impairment inside RAR it's not there.
So the late payments will not affect in RAR, right? Because that we cannot see, like if there is any late payment by the customer, so that we cannot see in RAR, right?
No, payment itself never comes to RAR.
Okay.
Because what IFRS 15 says that payment is not relevant for recognition. If you sell your goods and services to customer and customer accepts it, that's it over.
So let's say like for the late payment, they have some charges, but that charges also supposed to be recognized in the revenue, right? That how that will deal, that when just not considering it in RAR, like how, because it will impact audits, right?
So again, we are saying, right, late payments are not part of your operational revenue, right? You are not in the business of charging the fines. You are not collection agency. Your business is selling the phone, selling the data pack. That itself is like a initial contract with customer. But if they are making late payment, that's a payment terms that goes into your, it will affect your bank or cash, but it doesn't affect your IFRS principle. That's why they are handled directly in the accounting level. They are not handled via RAR.
Okay.
They are handled directly. Though you get revenue, but they are not part of this IFRS 15.
Okay.
IFRS 15 regular operational. That's why SAP uses any, you can read help.sap.com, anything, regular operational revenue. The business purpose why you have set up this one, to sell the data services, sell the data packs and the phone. That is only revenue for you. Other peripheral or miscellaneous revenues are not part of this.
Okay.
Because they are incidental, right? They may pay on time, they may not till late time. Not so those are not part of your operational things. Okay, good session. I don't know you got it or not. This is the basics.
Yeah. So Yashika, one last question. The second one, right? Recognized during fulfillment. So it sends a message to RR module, is it, when a goods issue is done for an item to recognize the revenue, or is it a manual?
No. Because when SD order, right, you have fulfillment. You have right. We go and do that picking, packing, delivery. So after delivery, message will come to RR. That okay.
So you basically configure it as well, or from item category configuration, then it just gets picked and goes by itself, or do you have a separate configuration for that?
No separate configuration, but in SD itself we have configuration. What events should come to RAR. Here, right before this step we have. So there itself it comes. When you see that configuration, I will show you. So automatically it comes. Okay. Now let me show you that as well. Integration. This activate functions. You see here. What are the functions? Milestone, billing transfer, fulfillment, service transfer, intercompany invoice fulfillment, purchase invoice. You see here. PDF. This and all messages we are sending it to their acceptance. If you want any other, you can add here like this.
So IB fulfillment is inbound. PI is
milestone.
Milestone billing, and PGI is which one, Yashika, on this?
Yeah, this one.
POD. But then we don't have PODs all the time, right? So by POD, do they mean PGI or has to be POD?
Not PG, post goods issue after PD, after PGI, POD will be there.
But POD is optional thing, right? So I'm just wondering.
It's optional. Yeah, this is
I haven't seen in many clients using POD, especially now with transportation and other modules, right? So if not POD, it cannot recognize the actual PGI, or
if you are in transportation industry, actually you are not your revenue is not based on goods revenue based on services, right? So if
no, what I meant is so when you integrate TM with SD, right? So these days, you don't really get that POD signal. I mean, it's all, there are other areas that has it, right? So I'm just wondering, instead of POD, PGI, there is no option to recognize on the basis of post goods issue, is what I understand looking into the screen.
Acceptance date is there, right? You have to say that one when it is going to be accepted after PGI. So any other is there? I have to check that one. So you tell me the case, I'll think if I think.
Yeah, I mean, just normal scenarios, POD is, I've only seen POD in one of my projects, way back. I mean, Yeah, I primarily work in SD space, right? So I have only seen POD being used once in my life, work life. So I mean, I'm just wondering whether by POD it means PGI as well, or has to be the actual POD feature that SAP has.
There are many other fulfillment events. Acceptance date is there.
Okay.
So when customer is accepted or whatever is available. So maybe SAP standard has given this few. But if you have any other, you can define any other custom one.
Maybe we can we will anyway run a cycle, right? So we'll fine. We can test it out. Yeah,
Yes.
just by having PGI.
It's not always that POD. I know it. So we can go with custom defined acceptance. Maybe after delivery, 3 days you should be able to get this one. Yeah. There should be some other thing.
Okay. Okay.
Not
And
always
how about non-SAP things like, so do we get if it's a non-SAP system, we should also get a signal, right? That it's been shipped or accepted by the customer. So do we get is there an integration for non-SAP systems to understand this?
You are saying that if you are using the third-party applications for RAR, how do we get the fulfillment?
Yeah.
They have to send that message to us, and that message we will create that fulfillment items in RAR.
Okay. Okay. So there'll be fulfillment items. Okay.
Yeah. They should send that this is the fulfillment happened, send that message. So if we are using, say for example, for time-based, we don't need any fulfillment. So we don't need that events. The message is enough for us to start. Our time-based means straight away it starts from November means November, October means October. So, but if it is physically you are delivering any goods, then you need that event. Yeah, any question?
Okay.
So tomorrow we will understand the inside SAP and inbound. We are always talking about sales order. This we will understand how they can bring it into SAP, especially this portion. In more a bit, we will understand integration inbound, and then we will also try do the configuration and we'll test it.
Okay.
Any other questions?
Nothing from my end.
Okay, fine. I'll stop the sharing. Tomorrow.
Sure.
Sure.
Thanks.
Thank you.
Thank you.
Thank you.
Bye.